Oh, wait.
Hello, Hamid.
This volume is real. I cannot hear them.
The volume is down?
I can't hear them.
Okay. How about now?
Tina, are you ready?
Yes.
Okay, that's better. Thank you very much. Good morning, everybody. This is the time and place for the Nevada Tax Commission meeting. Today is August 14th, 2023. Today is approximately 9:03. Calling this meeting to order. Tina, would you call roll, please?
Yes. Commissioner Lippman,
Present.
Commissioner Bursey. Here. Commissioner Rotifer,
Here.
Commissioner Brown,
Present.
Commissioner Johnson,
Present.
Commissioner Byram,
I'm here.
Commissioner Witt,
Here.
and Chairman Wynn.
I'm here. Thank you very much. First thing on the agenda is public comment. We have a blurb we need to read into the record. Tina, would you like to read that into the record for me, please?
Yes. Persons wishing to provide public comment remotely may access the meeting by using the telephone numbers and webinar ID posted on the agenda. Public comments will be limited to 3 minutes per person, and comments based on viewpoint will not be restricted. Public comment will be available at the beginning of the meeting and at the agenda. At the discretion of the chairperson, additional public comment may be heard when that item is reached. The chairperson may allow additional time to be given to a speaker as time allows at his sole discretion. This is pursuant to NRS 241.020 and 241.030. Thank you.
Thank you very much. Do we have any public comment in Reno?
No public comment in Reno.
Do we have any public comment on the telephone or Zoom?
We do have one person raising their hand, and if anybody would like to provide public comment on the telephone, please dial *9. Mr. Kazi Aziz has his hand raised. There he goes.
Mr. Aziz, can you hear me?
Yes, sir. Good morning.
Go ahead with your public comment, please.
No, sorry, it was by mistake. I just pressed the hand, so I don't have any comment.
Okay, thank you very much. Any other public comment on Zoom or the telephone?
I do not see any. Thank you.
Is there any public comment in Las Vegas? Seeing nobody running up, public comment is over. Chief Deputy Neverez Goodson, if you would swear in the parties, please.
Yes, anyone who is expected to testify today, either by telephone in Las Vegas or Reno, would you please stand and raise your right hand?
Yes.
Thank you. And if you swear or affirm to testify truthfully today, will you please say I do?
I do.
Thank you.
Okay, thank you very much. Before we get into the actual agenda, I've got two items I'm going to pull. I'm going to pull item number 5C3, which is the royalty exotic car rental. We'll put that on a future agenda. And I'm also going to pull 5A2, Marlon Rimaldo, and we will hear that in the future also. Okay, first thing on the agenda is meeting minutes. Are there any corrections, revisions, motions?
Mr. Chairman, this is Commissioner Rotifer. I move to approve the minutes.
Thank you.
Commissioner Witt, second.
Thank you. I have a motion and a second. Any further discussion? Seeing none, all in favor say aye.
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 Opposed? Motion carries unanimously. Thank you very much. Okay, that brings us down to the consent agenda. Is there anything on the consent agenda any of the commissioners would like to pull?
Chairman, it's Commissioner Brown.
Yes, sir.
I'd like to pull item 3C2, which is Talk for Less Wireless Communications, and 3E2, which is Jasvinder Singh.
Give me just 1 second, please. For some reason, my agenda numbers don't agree with Commissioner Brown's.
Mine too. I believe, is it items 4? C, 4E2?
You're right,
Okay.
I'm sorry, I apologize. 4C2 and 4E2.
C2 for E2.
Or C2.
Yep. For E2.
Great. Okay, thank you very much, Commissioner Brown. Any other commissioners have anything they would like to pull?
Commissioner Lippman, for the record, I would like to pull the matrix matter. I know that was added to the agenda and I don't have the revised agenda. It was added a little bit later. So is that 4F?
4F1.
Thank you. Yep, 4F1.
Okay, that has been pulled.
Thank you.
Anything else? Okay, I entertain a motion for approval of the consent agenda, except for those 3 items.
Commissioner Brown moves to approve.
Commissioner Lippman moves to second the motion to approve.
Mr. Chairman, this is Commissioner Road for just one question on the motion. We do have on item 4B 14 TCG Wellness Inc. That one's actually recommended for denial.
TCG Wellness.
TCG Wellness Inc. I believe the department is recommending that one for denial.
Okay, so you want to pull that so we can hear it separately?
No, I just want to make sure that our motion is clear if we're approving everything.
Okay. Okay. Any other questions on B14, TCG Wellness? Okay, I have a motion and a second. Further discussion? Seeing none, all in favor, say aye.
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 Opposed? Motion carries unanimously. Okay, Commissioner Brown?
Thank you, Mr. Chairman. Regarding item 4C2, Talk for Less Wireless Communications, this is an authorized retailer for Cricket Communications, and Cricket Communications is owned by AT&T, my employer, so I'll be abstaining from this item.
Okay, thank you very much.
Is that Talk for Less?
Yeah.
Okay, this is a waiver and penalty for Talk for Less that exceeds $10,000. Are there questions or discussion on that?
Mr. Chairman, this is Commissioner Byram.
Yes.
On the topic page for this item, there's 3 numbers. The first one is the total penalty assessed, the second total interest assessed, and then there's a line and a sum, and then a double line. The dollar amounts in the total penalty and total interest assessed are the correct dollar amounts originally assessed, and the state is approving waiver of 100% of the penalties and 50% of the, or 100% of the penalties and 50% of the interest. And so the sum, the total to waive, is correct, but it's misleading the way it's stated because it appears that the first and the second lines sum together to equal the total that's double underlined. For an accounting nerd, I'm just stating that's the correct number, but it's misleading because they should have had like maybe 2 columns, one showing the 50% of interest that's being waived Because 20,000 and 35,000 doesn't equal 38,000. See what I mean? The 38,000 is the correct amount.
Correct.
So it would be clearer if it said 50% of total interest assessed, and then had the correct dollar amount of 17,000 instead of 35.
I agree.
Anyway, if that one just could be edited before it goes out.
Okay, we have duly noted that, and that correction will be made.
Mr. Chairman, if there are no further questions on that, I would approve item 4C2, talk for less wireless with that correction made.
Commissioner Lippman moves to second with the clarifying correction. Although in substance, it's exactly the same, it's just clarification, which makes a lot of sense for everyone.
Okay, thank you very much. We've got a motion and a second for the discussion. Seeing none, all in favor, say aye.
Aye.
Opposed? Motion carries.
Mr. Chairman, I would just make a point that I abstained from that vote. Again, thank you.
I apologize. Thank you very much, Commissioner Brown. Commissioner Brown has abstained. Okay, Commissioner Brown, E2.
Thank you, Mr. Chairman. I don't know if the taxpayer is present or not, but a couple things. I'm going to support this. The state is going to recover, the department's going to recover the entire tax amount. But I did have a question in that the letter to the department from the taxpayer is saying that part of the reason that they wanted this offer and compromise was to be able to pay for their children's schooling. And I noticed on the 2020 tax return, it shows 2 children as dependents. However, on the 2021 tax return, there are no children as dependents. So I don't know if the taxpayer or someone from the department is present to speak to that. And the second issue I have is, there's 7 vehicles insured by the taxpayer, a Mercedes, 2 Lexus, a 2021 Jeep, and a 2021 Toyota. So I'm going to support this today, but I would just say if this happens to come back to us for something less than the full amount of the tax, I would have a different opinion.
Okay, I agree. We have somebody from the department going to address this.
Thank you, Mixley Arambula, for the record. I am not able to address as to why the dependents dropped in the year of 21, I believe Commissioner Brown mentioned. I do know that currently they are separated, and under the terms of their separation, he is to keep the mortgage of the wife and the expenses on that end and keep himself with his own mortgage.
Okay, thank you.
Thanks. I appreciate that. And I did look at the tax return to ensure that both years the filing status was married filing jointly, because I thought that might be the case because of the separation that they might have been on another tax return, but the filing status was married filing jointly for both.
The second wife, though. Maybe a different wife than the
Could be.
parent.
Could be. Anyway,
And
I'm prepared to support it.
I don't mean to interrupt, but Chairman did request that I repeat my name. For the record, Mixley Arambula for the department.
And I'm sorry, spell it too, please, for the.
Yes, spelled first name Mixaly, last name Ara, M as in Mary, B as in boy, ULA.
Thank you very much. Commissioner Brown, any other questions on that?
No, thank you, Chairman.
All right, thank you very much.
Chairman Wren, this
Yes.
is Tina. The matter of TCG Wellness, Inc. Is actually not for denial. It was for approval, I believe. And so it went through for approval?
Sort of, because it wasn't pulled before we voted for everything. But then there was a comment made, and then there was another motion taken to approve it as a denial. So you might want to have him withdraw the denial, and then it goes through as part of the original vote.
Okay. So that was supposed to be for approval. Is it possible to bring that vote back for TCG Wellness?
I'm sorry, spell it again, please.
TCG Wellness, Inc.
Yes.
Is actually not for denial. It was for approval. I believe.
He's talking.
We can't hear you at the moment.
Can you hear me now? You turned me off. I just asked you to spell your name.
Just like that.
Sorry about that. My speaker was off. So we're going to stay on the item we're on right now, and then we will go back and rescind the vote on the consent item and re-vote on it. Right now, we are on item number E2, correct?
Yes.
And
Correct.
if there's no further discussion on that, I'd entertain a motion.
Commissioner Brown will move to approve.
Commissioner Byram, second.
Okay, I have a motion, a second further discussion. Seeing none, all in favor, say aye.
Aye.
Opposed? Motion carries unanimously. Now I would entertain a motion to rescind the vote on the consent calendar, and we will rehear it.
So move, Commissioner Brown.
I have a second.
Commissioner Witt, second.
I have a motion and a second for the discussion. Seeing none, all in favor, say aye.
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 Opposed? Motion carries unanimously. Okay, so what Tina explained to us is on B14 TCG Wellness, that is actually to approve, not deny. Is that correct, Tina?
Yes.
Okay. Any other questions on that one?
We got it.
Okay, I entertain a motion
That originally.
to approve the consent agenda.
Commissioner Brown, so moved.
Commissioner Witt, second.
I have a motion and a second for the discussion.
So do we need to exclude the items that we've pulled from this approval?
No, because we voted on those separately.
Not all of them. I pulled Matrix.
Oh, we haven't got to that. We're still going to hear that one.
Okay,
Just make this motion specific to TCG.
Yeah. Well, that'll be.
okay. Oh, so it's just specific to TCG. Okay, thank you.
Unwound the whole consent agenda. That's the motion.
But I thought we
But we
did.
already had, because first it was covered in the first vote, then it was undone in a separate vote.
Wait a minute. I have a motion and a second to reapprove the consent agenda. All in favor, say aye.
Aye.
Opposed? Motion carries unanimously. Thank you very much. Okay, now we will go to F1 matrix.
Thank you.
Commissioner Lippman, if this is Yvonne Navarez Goodson for the record, if I may just jump in here really quickly.
Oh, please do.
We had a motion originally to approve the consent agenda minus those items that were pulled. We rescinded that particular motion so that we could re-vote on the consent agenda. I would suggest that the vote on the consent agenda item, again, exclude the items pulled because we are handling those matters separately. So perhaps if we could get a clarification to the motion to rehear the consent agenda item minus item C2, E2, and F. That would be the proper motion.
Okay.
I agree.
Commissioner Brown, was that your intention?
Yes, Commissioner. Thank you.
And Commissioner Witt, that was your intention on the second?
Yes.
Okay, very good. Clarification has been made. Now we will move on to F1 matrix. Mr. Lippman.
Thank you. So the only question I have, I am fully in support of this settlement agreement, and I commend the taxpayer and the Department of Tax for coming to this meeting of minds. The question I have is this information somehow noticed to the Cannabis Compliance Board?
You need your speaker, sir. Oh, it's on. Okay, it's on.
Okay, Good morning, Commissioner Littman, David Pope with the AG's office on behalf of the Department of Taxation. So yes, it's the information is communicated to the Cannabis Compliance Board, and so they know the status of the tax issues with this taxpayer.
Excellent, thank you. And I see a Mr. Ed Humphrey has his hand up. I'm not sure if that's related to this or not, Tina.
It is, yes.
It is. Yes, and if I may, again, Commissioner Littman, I have him on speakerphone. He wasn't able to join. He had another hearing that he's trying to do both right now. So if you have a question for him, Ed, can you hear us?
I can hear you on Zoom, so I was able to get in. I do have another hearing in about 7 minutes.
Okay. So I'll hang up
Again,
here.
just wanted to understand the communication between these two boards, since I know they exist and I know that this is really relevant to their decision-making on a going forward basis. So thank you for that clarification. So if there's no further discussion, I would move to approve this item 4F1, I believe is the agenda item.
Commissioner Bursey seconds.
I have a motion and a second. Any further discussion? Seeing none, all in favor, say aye.
Aye.
Opposed? Motion carries unanimously.
Thank you.
Thank you very much.
And thank you very much for Matrix.
Thank you very much. That concludes our consent agenda. So if there's anybody in the audience or on Zoom, all of those items have been heard. And we're going to move on with the calendar. Okay, Chief Deputy Neverez Goodson, next item, please.
Yes, thank you, Mr. Chair. We will move to agenda item number 5 for our compliance division. We'll start with Part A, the department's recommendation to the commission for the denial of an offer in compromise pursuant to NRS 360.263. The item that we'll be considering today is in re Diana Friege, and we have Mixley
Arambula. Mixley Arambula for the department. This morning, I'd like to present a offering compromise. Diana Friege has submitted an offering compromise for debts of Puffin Smoke Shop LLC. The business started in November of 2021. The offer is to pay $20,000. The outstanding liability is $40,812.19. It is comprised of $23,078.40 in tax, $7,915.68 in penalty, $9,818.11 in interest. The interest has been calculated through August 31st of 2023. The offer is of $20,000 and it has been paid. The stated reason for the request is doubt as to collectability and consideration of equity and fairness. Ms. Friege is 78 years old and is living on a fixed income. She's stating that she doesn't have the money or the assets to pay the full amount owed to the department. However, a review of her bank statements show otherwise. Ms. Friege began to operate the business after her husband passed away, but chose to sell the business after it was too big of a responsibility for her to handle. The department was not contacted by an escrow company regarding the sale of the business and the amount owed. The business sold for $150,000, of which the department did not receive any of the proceeds of that sale. Ms. Friege purchased a new home in Michigan after the sale of the business, and her down payment of $47,000 included $17,000 from her spouse's life insurance and $30,000 from the sale of the business. Records indicate that Ms. Friege transferred $70,000 from her bank account to her son's accounts. Ms. Friege's personal financial statements reflect her monthly expenses are of $1,475, below the national standards for the allowable living expense. Her bank statement provided includes a total of $130,343.29. The department requested the credit card statements for the monthly expenses noted on the personal financial statements and has not yet received them, The financial records show Ms. Friege is helping her sons financially, of which include making the car note payments of $737.48 monthly. The department did offer to compromise the penalty and interest However, Ms. Freak's representative, Mr. Valari, did not agree for his client. Therefore, after careful review of the account, the documentation submitted, and the department's research, it has been found that the reason of doubt as to collectability and consideration of equity and fairness is not supported. Therefore, the department respectfully recommends that the Nevada Tax Commission deny the offer for finalized audit deficiency determination for the periods of December 1st of 2018 through October 31st of 21. I'll be happy to answer any questions the commission may have.
Okay, do we have any questions on this one? I'll point out that we had this on the agenda previously with another offer that wasn't accepted either. So any questions from the commissioners?
Mr. Chairman, this is Commissioner Byram. I am bothered by this a little bit because this woman who is now 79 years old has, normally we will take and give consideration if they're beyond their earning years. Yes, she did have access to some money and didn't pay it in. I don't know why we didn't have a lien for that, or maybe their timing, whatever. But she's offering to pay near, 50% of what's due and almost all of the tax. She's $3,000 short of paying the full tax, and that's what had been offered and rejected. But to me, I think sometimes we have to just apply a little bit of fairness and just say, well, take the $20,000 and let this woman live her life. I mean, she's giving money to her sons. One of her sons has a handicapped daughter who's they're having to deal with medical expenses, and there's other issues. I don't think we know the whole backstory, but I would just ask if we can apply a little bit of before this one and approve the offer.
Okay, I do have a question. Did the offer change from our last hearing?
No, sir.
It was 20,000 last time too, right?
Plus the 20,000 already paid. If I can address a question, I believe that the commissioner had in reference to why the department does not have a lien.
Mhm.
This matter moved fairly quickly. Once the audit deficiency was determined and it was sent to the taxpayer, the taxpayer's representative submitted an offer in compromise right away. Therefore, that is the reason why we don't have a lien on this debt. We do need to hold all collection activity for the offer in compromise to be moved and presented to the commission. As for the balance remaining, there is a balance still remaining of $23,078 just in tax. So we had countered the representative, Mr. Valari, asking him to pay that tax portion off so that we could submit an approval to waive or an approval for the offer in compromise, specifically for the balances left over on the penalty and interest. And he told us that he was going to deny that counter.
Okay, thank you.
Mr.
Okay,
Valari is on the line.
The taxpayer's on the line.
Okay,
Good morning. This is Richard Valari. Can you hear me?
yes,
Hi. For the record, my name is Richard Valari. First name spelled R-I-C-H-A-R-D. Last name Valari spelled V as in Victor, A-L-L-A-R-I. I'm a licensed CPA here in Nevada, and I did represent the taxpayer. I know that the facts I have a dispute in some of the facts by a department. First of all, we're here again because when we were scheduled to speak last time, we had the technical issues. That was the May 1st commission meeting. And that's why that's why the offer didn't change. So I just want that reflected on the record. And it's correct. My taxpayer is 79. She's on fixed income. She moved back to Michigan from Nevada back in 2021. And since then, she's had numerous health issues. She's had COVID twice. Her husband ran the business. He started the business in 2009 and passed away, I believe it was 2017. And that ended 58 years of marriage. And my client has had numerous depression issues from that. About the audit, the items, what would happen was the taxpayer was notified of the audit while she was in the process of moving. So that was in November of 21. She was in the process of moving back to Michigan. At the time, the business had been sold. Items were boxed, and the only items we had for the audit were a spreadsheet. What the taxpayer would do is they would take the receipts from the registers and forward them to the enrolled agent who prepared the sales tax return. The enrolled agent's a relative of the taxpayer, and the enrolled agent's located in Michigan. One thing about the audit, they don't identify the type of business it is. They make reference to alcohol and tobacco sales, but the taxpayer also had small food items that they sold, everything from, bottled water, pop, chips, that sort of thing. So it's reasonable that there would be exemptions. We just didn't have the records because of the moving situation to support the exemptions. When the audit was completed, exemptions amounted to about 24% that couldn't be substantiated. And when the assessment came out of $43,000, 3% of that was for use tax, which is pretty standard in audits. And 97% of the assessment was due to the exemptions the taxpayer had claimed. These exemptions, this was tax that was never collected from customers. The taxpayer correctly understood that these small food items, it's not prepared food subject to tax. So the register wasn't programmed to calculate tax on that. Our position, and first of all, I want to correct something the department said. As a CPA, I cannot decide if my client's going to accept an offer or not accept an offer. I had numerous discussions with Randy Absell, who is a revenue officer, and I would relay messages to my client. And ultimately, my client makes the final decisions. All I can do is advise them. So I did not make any decisions. All I did was relay the message. We felt that with the $20,000 paid, that meant that on the audit findings, about 12.51% of sales would be exempt. That also includes the use tax portion. And we believe for the type of store that my client ran, that would be a reasonable amount of exemptions, even though we couldn't prove them. Numerous times I asked to speak to someone above Randy's level to kind of relay these messages. And we skipped the hearing part because rather than do a petition and go to hearing, we decided to do the OIC simply because my client, she's 70, well, at the time when I first met her, she was 78. She just doesn't have the money. She's on fixed income, and she supports two sons. One son has an addiction issue and another son is just out of work. So that's why she pays for the leases of the car. She does what any mother would do for their children. We have put almost half down for the tax owed to get us from a 24% exemption down to about 12.51. And we believe under the Taxpayer Bill of Rights that there's common sense that should be applied for the type of business. The audit findings never indicate anywhere the type of business my client had. They make reference to alcohol sales, they make reference to tobacco sales, but they don't make reference to anything else. And because of circumstances where my client was notified of an audit after the business was sold and while she was in the process of moving back to Michigan, the department was not able to conduct a walkthrough. The one question I raised continuously during my discussions with the department was, there was no sales tax clearance letter that was, to the best of my knowledge, that's on file for the sale of this business. And I don't understand why the department would choose to really try to get this money from someone who's in a twilight of her life as opposed to someone who bought the business, is right here in Nevada, and is operating the business. I don't understand that, but I would respectfully request to the commission that please be empathetic on my client's behalf. She has limited income, and yes, there was some gain from the sale, but she also has, I believe the amount that's still owed to the IRS is $20,000. I don't have the exact figure, but the last figure I saw was about $20,000. So even though she's 79, she still has to contend with the IRS, which is just incredibly stressful on her. She's absolutely petrified of the IRS. And I would just ask in this case, as Commissioner Byron brought up earlier about taxpayers who are elderly in the United States, that some compassion be given. And remember, the most important point, the taxpayer never collected the money and pocketed it for these exemptions and then ran off to Michigan. I'll take any questions from the commission if there are any.
Okay, thank you very much. This is Commissioner Wren. You know, for the taxpayer, one of my concerns, and I understand her age, but I think that what we talked about last time and what I read in the file last time and this time is there was pretty large sums of money that have passed to the sale of the property. There was money from insurance returns. There was $70,000 going out of her account into her son's account, which is a large amount for whatever reason. But then one of my concerns was, in reading back through the file, is it appears that financial information and monthly expenses were asked for and never received. Correct in the way I'm reading that?
That's not true. Commissioner, I don't believe that's correct. I believe we submitted that information twice.
Okay.
Mixley Arambula for the record. My information is here that we requested credit card statements to confirm the monthly expenses, and that was not given to Randy.
Yes, I believe we had a issue with the credit cards. My client doesn't do online, she doesn't have apps, she doesn't do online banking, she has paper, and she just couldn't locate them.
Commissioner Lippman, for the record, may I ask a question?
Yes.
So, Mr. Valeri, the first question is, I'm a little bit confused about the liabilities. So it appears to me that the tax liability is just over 23,000. Is that still outstanding? And the offers to pay 20,000 of the $23,078. Is that correct?
Let me clarify that for you, Commissioner. The tax originally on the audit findings amounted to $43,078.40. We made two payments to the department. One check was for $7,000 and the second check was for $13,000. So we have to date remitted $20,000 of the $43,000. Does that answer your question?
Yes, and so that is the 20,000 that is offered. And so there's not another 20,000 being offered.
That's correct. My client, which is not, she has, this is her best and final offer to the department.
I see. So Commissioner Byram, I was confused as well. So the offer is really not to pay almost all of the tax. That's what I thought it was. I thought it was another 20,000. And okay, so now I'm clear on that. The next question I have for you, Mr. Valari, is I wasn't following your numbers, and I happen to be a CPA as well, when you were describing how you kind of reverse engineered what you thought a fair exemption amount might be.
Sure. So on the original audit findings of 43,000, 97% of that pertain to exemptions that we can provide substantiation for. So by paying the 20,000, And when I recalculated the audit findings, it turns out now that as things stand today, what we're claiming is that 12.5% of the revised amount with the payments reflected would be considered for exemptions that we can't substantiate, because one point that I failed to mention, I apologize, it slipped my mind, was that when the taxpayer moved from Nevada to Michigan, there was, it's not clear to me if it's theft or loss, but a bulk of the taxpayer's belongings disappeared, which included her birth certificate, her passport, and in addition to business records. We don't have those business records, and unfortunately, we'll never be able to secure them. And that's something that the moving company, there's been, I know that my client has spoken to the moving company. I don't know where they stand with that at this point. But what I'm trying to establish here is that we put 20,000 down, and the way it stands now, if the department, any convenience store, it's reasonable to assume maybe 10 to 15% of sales may be exempt if you sell small food items, and that's what we're claiming. The taxpayer submitted a list when she signed it, where she listed the items that her store has always sold, and those were never considered in the audit because we couldn't substantiate them. So what we're proposing is that, look, there's still about 12.5% of those disallowed exemptions that are outstanding because we do not wish to make any more payments. But given the fact this is a convenience store, it's reasonable that 12.5% of sales would be exempt.
Got it. So thanks. I understand your math. I also agree that the buyer should have requested a tax clearance certificate. And if they had, this would have been apparent that this was outstanding, and therefore it very well might have been paid through escrow or somehow settled between the buyer and the seller. And so and this is a frustration, as I hope you can empathize with the Department of Tax, when there's a sale and we don't get our assessment paid. Thank you for the clarification.
Thank you, Commissioner.
Okay,
Mr. Chair.
Go ahead.
Mr. Chairman, this is Commissioner Byram. I have a question for Ms. Arumbala. On the recommendation, it says the offer is to pay $20,000. The outstanding liability of $40,000 is comprised of $23,000 tax and then penalty and interest. And then it says the offer $20,000 has already been paid in full. So either that's misleading or they're going to pay, they're paying nearly all of the tax. So when Commissioner Lippman asked, you said that it was $43,000 in tax and they've paid $20,000. So this sentence should have said that the outstanding liability of $60,000 is comprised of $43,000 tax, $20,000 has already been paid. But it says it's to pay $20,000 on an outstanding liability of $40,000 and $23,000 tax. So which is it? Are they going to pay an additional $20,000, or why would that be considered paid and then not included in the numbers that are due?
I can understand that, Commissioner. So the original base tax was $43,078. 20 of it is what the taxpayer has paid, therefore leaving us with the tax owed of $23,078. So for the future, I can make sure that my briefs are stating exactly what you're saying.
Okay, yeah, normally it would have, the math would have added up, but this time I'm looking at that and the sentences are correct, as you say, but it's just a little confusing. So I was thinking that they had paid nearly all the tax and maybe another $3,000 would settle it, but if it's that far out, I'm kind of split on this one. So if we want to kind of just cut this short, let me make a motion, see if it goes anywhere, and if not, we'll make an alternate motion. I would move to approve the offer and compromise for Diane Frage.
This is Commissioner Rutherford, second.
Okay, I have a motion and a second. Any further discussion? All in favor, say aye.
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 Opposed?
Nay.
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 Split equally.
I was going to say that's split equally, so it doesn't pass.
Can I chime in?
No, thank you. Is there an additional motion or a different motion?
Mr. Chairman, this is Commissioner Byron. Let me take another stab at this. I would move to deny this offer and encourage the taxpayers representative to work with the department and to come up with another offer closer to what would be acceptable and provide the documents that are needed. If you can obtain them more currently, credit card statements, you can get them straight from the bank or the credit card company. Sorry, that's a long motion, but I think you're close. I just think that you need to continue the process and try it again.
Okay, the motion is to deny with further explanation. Do I have a second?
Second, Commissioner Brown.
Commissioner Lippman seconds with the additional suggestion that Mr. Valari, I think that if you can rationalize your offer, hopefully a little bit increased with the estimation of the exemptions, that might be compelling.
Okay, thank you. I have I'm sorry, Commissioner Bursey.
Oh, go ahead and finish your sentence, Mr. Chair.
I was just going to call for the vote if there was no further discussion.
I do have a question. I am still confused about what the outstanding liability is. I'm looking at page 12 of our materials on this taxpayer. And under the recommendation, it says the offer is to pay $20,000. The outstanding liability is $40,812.19, of which $23,078.40 is the tax. So my understanding reading this is that there is $3,078.40 left of the tax to be paid. And I don't think that's what I heard in the explanation from Mixala.
Yeah, and that's not what I heard either, and I'll let her re-explain it, but I think that the outstanding liability had been $60,812, and that the taxes had been $43,078. Is that correct?
That is correct. There is still an outstanding $23,078.40, even after receiving the $20,000 from the offer.
And was the original tax amount $43,078?
Base tax, the original from the audit was the $43,078.40.
And then what would have been the $60,812.19 was taxes, penalty, and interest?
That is correct.
Commissioner Bursey, does that answer your question?
Yes. Thank you.
Okay, I have a motion, and a second. No further discussion. All in favor, say aye.
Aye.
Opposed? Motion carries unanimously. Thank you very much. Thank you. Chief Deputy Everett Goodson.
Yes, no problem. Thank you, Mr. Chair. Our next agenda item is 5B, the approval of a refund or credit request in excess of $250,000. Our agenda item here is AIU Insurance Company, and for the department, I believe we have Tax Manager Jolynn Smith in her Reno location.
Okay, go ahead.
Good morning. For the record, Jolynn Smith, Tax Manager for the Department of Taxation. View of the account, the department is recommending approval of the credit refund in the amount of $302,882.85 for the overpayment of the industrial insurance premium for AIU Insurance Company for tax year 2022. After processing the taxpayer's reconciliation return for the 2022 tax year, the department reviewed and verified the taxpayer filed and paid their quarterly insurance premium returns timely. However, on periods ending March 31, 2022, June 30, 2022, September 30, 2022, and December 31, 2022, the taxpayer did not apply their earned Division of Industrial Relations credit. The discrepancy was covered by the taxpayer when they filed their annual reconciliation return for 2022 reporting period, resulting in an overpayment and refund request in the amount of $302,882.85. Thank you.
Thank you very much. Any questions of the state?
Commissioner Witt, move to approve.
Commissioner Brown, second.
Thank you. I have a motion and a second for the discussion. Seeing none, all in favor, say aye.
Aye.
Opposed? Motion carries unanimously. Thank you very much. Chief Deputy.
Thank you, Mr. Chair. We'll move on to agenda item 5C. We have two matters under this agenda item. This is a taxpayer's appeal of the administrative law judge's decision pursuant to NRS 360.245 and NAC 360.175. Our first agenda on here is for Blackout Inc. And on behalf of Deputy Attorney General Michael Beetz and taxpayers.
Okay, thank you very much. We'll start with Mr. Veets. You can state your name and spell it for the record, please, then go ahead.
Good morning. First name Michael, last name Veets, spelled Victor, India, Echo, Tango, Sierra, bar number 14640 on behalf of the department.
Terry Johnson here on behalf of the taxpayer. That bar number 12641.
I'm sorry to interrupt. There's a lot of paper shuffling and I cannot hear you.
Yeah, if you start over, say your name, spell it just for the record.
Okay.
Thank you.
For your record, my name is Terry Johnson, TerryJohnson, and I am the attorney of record for Blackout.
Okay, can you hear him? Do we need to move a speaker closer?
Yes, thank you.
Okay, is that better? Okay. There goes first.
Department or petitioner?
Department.
Good morning. And good morning. The commission is convened today.
Wait a minute, I'm sorry. I'm gonna put my glasses on.
Okay.
This is the taxpayer appeal, so let's go with it. Start with the taxpayer.
Okay.
Start with that.
All right, good morning, Mr. Chairman, members of the commission. We are here today to appeal a decision of the administrative law judge. This matter has been fairly thoroughly briefed with responses provided back and forth by the department. And so I don't want to consume your record by reiterating extensively items already contained in your record. I do just want to touch on what I think are the core issues here. One, whether the contested charges were for an admission or for a service. Two, whether the activities at issue were included with the meal and therefore already taxed. And then third, the issue of whether there were any separate services provided that were a part of the sale. And so as we indicated and have argued, the taxpayer provided uncontroverted testimony at the hearing that these charges were for admission. And the department's witnesses also said that the charges were for admissions. And as this commission knows, admission charges are not subject to sales tax. If anything, they would be subject to live entertainment tax. But as was discussed at the hearing, and I think both parties agree, the live entertainment tax would not apply here. Now, where the department's witnesses, both of them said that the charges were for admission and that you could not enter into the premises or that portion of the premises without paying the admission charge, this mirrored the representations made by the taxpayer that it was an admission charge for which you had to pay or you could not enter. In the department's brief, it filed, it attempts to explain away staff's testimony by saying, quote, that the admission fee was a service that was a part of the sale and that staff testified consistent with the audit report. Doesn't, however, cite to any testimony. And I believe you have a copy of the audit report, and the audit report makes no mention of an admission fee. makes no mention of how the activity at issue constituted a service, makes no mention of how the purported service was a part of the sale. Nonetheless, the representations made to the commission is that this was all contained in the audit report and that staff's testimony, notwithstanding how consistent they testified with the taxpayer about the nature of those charges, that this was all set forth in the audit report. So that's all we have left with regards to the admission charges, is that the department agreed in its testimony, in our position, that it was for admission. With regards to the service, what the department labels a service is included with the sale of the meal. NRS 372.060 talks about a sale and what it entails, and it includes serving of a meal. And the decision said on page 8, the substance of the transaction is the provision of various services involved with providing customers food and drinks. And the decision goes on to state that these types of services, in the same way that all of the associated services which restaurants typically provide their customers in the provision of food and drinks, are part of the sale. So the problem with the hearing officer's decision is that it completely ignores the existence of NRS 372.060, which says that a sale includes the serving of a meal. And as the commission knows, it's well established that statutes are not to be interpreted or applied in a manner that produces unreasonable results. And here, you could have, in the same transaction, the same activity taxed twice. Under NRS 372.060, the meal and the serving of the meal is taxed. And based on this reading, under NRS 372.065, because of the assertion it's a part of the sale, it's taxed. You're not served the same meal twice. So why would you be taxed twice on the same activity? Serving of the meal is serving of the meal, and the statute already includes that within the definition of a sale. You see, it looks like they jumped to services part of the sale without analyzing what's a sale. Because if they had done that, they would have seen that serving of the meal is included with the sale of the meal. And as I said in the brief, that serving is serving, and it doesn't matter if you're serving in the light, in the dark. It doesn't matter if you're serving at a drive-up restaurant on roller skates or at a hibachi grill where the person's flipping your meat into your plate. It doesn't matter if you're serving in a restaurant that rotates at the top of a tower. Serving is serving. And the department doesn't identify any statute, regulation, or case that says, but when you serve in the dark, that's a service, that's a part of the sale. And contrary to the representations made that this is set forth in the audit determination, you read the audit determination and nowhere does it make any mention of any such thing. And lastly, the issue of whether any purported services were a part of the sale. As you know, the Nevada Supreme Court has said that a tax statute must say what it means. So assuming for the sake of argument that it was a service, what does it mean to be a part of the sale? And so the petitioner argues that in order to find the answer to what does it mean to be a part of the sale, you have to read the statute in harmony with the regulation. And the regulation at issue here is the one pertaining to bundle transactions, which is NAC 372.045. In order for a service to be a part of the sale, the price of the service must be included with the price of the sale of the tangible personal property or the meal. That's a bundle transaction. There's no distinction, there's no itemization. It's one price, you get everything. Now, in its brief, the department says that the admission charge and the admission charge was, quote, inextricably conjoined with the meal. We have copies of the receipts A simple review of the receipt would instantly disprove this. You see on the receipts itemized entries for meals and drinks, admission. You could buy an admission without a meal. You could buy a meal without an admission. And the auditor supervisor, Roger Hovendick himself said that's where he started off at, looking on the website and seeing a price for admission and for the meal. And then he himself said that when he looked at it further, he saw that this was all broken down. And that's why the department at the hearing abandoned the notion that these were bundled transactions, and rightfully so, because clearly on their face, you look at the receipts, they're not bundled transactions. And so the petitioner argues that in order for it to be a part of the sale, it has to be a bundled transaction. That's, in our argument, is why NAC 372.045 exists. If it doesn't, then where does one go to find what does it mean to be a part of the sale? And we cited to some cases in our briefs. You look at the plain language of the statute with regards to any services that are a part of the sale. On its face, that implies that the sale could contain component parts. And in this case, no part of the sale of the meal included a separate taxable service because the serving of the meal was included with the meal. And so that's the petitioner's argument with regards to services as a part of the sale. And if you just look through the plain language of the statute, if you look at the Attorney General's opinion that we cited to, talking about goods and services and the treatment of each for purposes of taxation. If you look at the other states that have had occasion to look at substantially similar, if not the exact same language, it's model tax language, interpreting the exact same language, you saw in the briefing that we provided how other state courts have looked at this. Now, we acknowledge that's not binding on you, it's not binding on the courts of the state, but it should inform and it should be given its persuasive value. We cited to Andrew Second regarding the treatment of mixed transactions and the taxation of each when you have goods and services. And then lastly, the department's own regulations supports this argument. Because if you look at the regulations that we cited to in our brief, we cited almost a dozen different instances where the treatment of taxation on the services hinges on whether it's separately stated on the invoice or the receipt in this case. And so that all adds to the conclusion that even if you were to decide that contrary to staff's testimony and the taxpayers' representative's testimony that it was not for admission charges, even if you decide that it was for services, you could not, or should not, I should say, decide that it was services that were a part of the sale. It would produce unreasonable and absurd results to apply the statutes in this way. And the common denominator, if you look at the regulations that we cited to, is that the goods and the services are stated separately. In our argument, in our position, that's how you know the services are not a part of the sale. And in this case, these receipts show similar itemization where the services, if that's what you want to call them, were not a part of the sale. Thank you.
Thank you very much. And just so you know, regardless of the arguments today, I found this case very interesting because I assure you, I've been in restaurants that I wish had been dark and I couldn't see the food. Okay, the department, please.
Morning. This matters before the department to determine whether or not the petitioner has demonstrated a violation of NRS 233B 135. Second.
Yeah, move the speaker over a little bit softly.
Forgive me, I got a signal from Tony Wren, Chairman, that you could not hear me up north. Can you hear me now?
Yeah, it's okay. Go ahead.
Thank you. Now, this matter is before the commission to determine whether or not the petitioner has demonstrated a violation of 233B 135.3, and if demonstrated, whether that has resulted in the prejudice of a substantial right. As we've set out in our brief, the department submits that the commission should find that the petitioner has demonstrated neither and uphold the decision in its entirety because the ALJ did the appropriate thing in following binding Supreme Court law in applying Lloyd's v. Banks and determining that the substance of this transaction takes precedence and impacts how the law should be interpreted. Its form. In short, placing substance over form. In today's arguments, addressing them in reverse order from what I've heard from the petitioner, there are several citations in its reply to several NACs. However, they concern advertising agencies, broadcasters, court reporters, graphic designers, desktop publishers, taxes on repairs and replacing materials, computer software, and again, computer software. What has not been included is an explanation or identification within those statutes that shows that 372.060 or 065 does not count within the taxable amount of a sale, the service that is part of the sale of prepared food. In this case, the ALJ saw and identified correctly that the admission fee was in fact for a service. The petitioner has argued today that whatever you call it, service or however, but it needs to be pointed out, as is pointed out in our arguments, that prior to the audit, or rather during the audit and during the redetermination, the petitioner themselves identified it as a service. Additionally, at the hearing, when asked that an hour and 21 minutes into the hearing, what the admission fee was for, what it went to, the testimony from the taxpayer's owner was what it went to the services to cover the servers. This is again reiterating the point that the substance of this transaction is a service that is a part of the sale. That is part of the sale and is indeed inexorably conjoined with the sale of the service that is part of the meal, because it is undoubtable and it is not contested that a party could not make their way to their table, to the restroom, in and out of the restaurant, or do anything safely at the table apart from eat, unless they had the assistance of the service, which is paid for by that admission fee. As the taxpayer has acknowledged in its reply today in arguments, that service that's part of a sale is indeed and correctly taxed as part of the sales price. The fact that it was artificially split, and again, on the taxpayer's receipts, but not in reality of how and what it's paying for. This is the inexorable tie that we identify in our arguments, and it's one that can't be separated, regardless of arguments about other out-of-state decisions. To be clear, in the petitioner's arguments, there were references to live entertainment tax and now to bundled transactions. However, neither live entertainment tax nor bundled transactions was a basis of an assessment in this case. Neither one was. There's also reference now to mixed transactions. However, those mixed transactions are out-of-state laws. That is relevant because some of these decisions cited in the taxpayer's reply are over 30 years old. Had the Nevada Department of Taxation, had the Nevada legislature, and had the Nevada Supreme Court wished to include in its taxation laws and tax code mixed transactions described in these out-of-state decisions, they've had 3 decades to do so. They have not. And that 3 decades stands as testament to these not being influential nor binding on this court. And that first, as admitted, it is not binding, but it is also not influential. These decisions look at tax laws that are separate and different and distinct from Nevada's own laws. And again, the most close approximation, or the closest approximation that we can find in our laws, bundled transactions, was not a basis, I will repeat that, not a basis of assessment in this case. It is not relevant to the determination of this case because as the ALJ identified, when looking at the substance of this transaction, when looking at the actual purpose of this admission fee and what it goes to by the very testimony of the taxpayer, it goes to the service part of the sale. As joked about, and I think correctly so, given that it's a very unique business structure in terms of having people serve in the dark, it is nevertheless still just a restaurant that is serving food that customers no doubt enjoy. But the only difference between it and another restaurant where there could be no question of taxability of the service provided as part of the sale is that the lights are off. That is all.
So this is Chairman Wren. Quick question. In his testimony, in the taxpayer's testimony, he indicated you could go to this restaurant and just enter with the admission fee and not eat dinner, or you could go and not pay an admission fee and eat dinner. And I didn't read it that way in reading all the briefs. It seems to me that to get into this restaurant, you have to pay the admission fee whether you eat or not.
One point of clarification, Chairman Wren, did you argue that you could pay the meal but not the admission fee?
No, you could pay the, yeah, you could pay the admission fee and not buy a meal.
But not,
And have a meal without paying the admission fee.
Oh, if you go in and buy a meal, you have to pay the admission fee.
Okay, thank you.
yes, sir. Does that answer your question?
Yes, it does. Thank you. Okay, Commissioners, questions?
Excuse me, Mr. Chair, this is Commissioner Bursey.
Yes.
Question, I think to Mr. Johnson, and by the way, I think both council did an excellent job with their presentations. Thank you very much. Mr. Johnson, following up Chairman Wren, if I were to pay an admission fee and be taken into the premises and not buy a meal, would I be able to purchase a beverage, alcoholic beverage, Coke?
You could, you would not be required to, but you could pay the admission charge and just go in and either buy a beverage or not buy a beverage.
And thank you. I'm sorry that I interrupted you.
I was just going to clarify that you could also buy a meal without paying the admission by not going into the restaurant. You want to, like any full service restaurant, you want to just show up and get some food and take it back and enjoy your own darkness. You could show up to the restaurant, buy your meal and leave. So I hope that clarifies your question about the admission charge and in relation to the purchase of the meal.
It does. Now follow up. Commissioner Bursey, does that answer your question?
It does. I have one more question, Mr. Chair. I'm a little confused about the availability of examples of invoices that show that a patron only only paid the admissions fee. There's some indication that that actually happened, but I don't see any evidence of that. And in the department's briefing, it was indicated that the department requested copies of those invoices that would represent only an admission fee, but did not receive them. So I guess that's to Mr. Johnson.
Okay. There, as we discussed at the hearing, there was testimony on the record that the taxpayer furnished everything that the department had asked for. The auditor, Van Duzen, testified that they had received everything that was asked for, and all of the receipts that we entered as samples were provided as well.
It would seem to me, Mr. Johnson, though, if you're trying to prove your point that you can be admitted by only paying the admissions fee, that at some point those types of invoices would have been provided.
Yeah, there are invoices where persons paid the admission fee and did not buy a meal, which I think was the core question. And we did provide an example in our receipts where somebody paid an admission fee but did not pay for a meal.
Maybe someone during the remainder of this hearing could point me to that in our packet. Thank you. Yes, Mr. Beats.
in the taxpayers exhibit submitted for hearing, there were three receipts. Those three receipts purported to show that there were purchases of a admission fee without the purchase of a meal. Within those three receipts, questions were offered by the department of the taxpayer's witness, Ms. Levy. And when the department asked questions of those, one was identified to have errors. The details of that are fairly lengthy as there was a back and forth in questioning. But that was why the department discounted this, is that when one is said to be an error and that there are incorrect filings or incorrect entry of information, and they knew that immediately, the department did not see that there was actually evidence that was reliable, showing that there was the sale of one admission fee, but not the meal. And it should be within the exhibits that the taxpayer submitted. And you'd be looking for three receipts. It's the face of them. And I think that they're fairly long. I think one had 6 guests, the other had 3. And then the third, I think, was 4.
I saw those. I'm going to reference them again while you're talking. Thank you.
Yes, ma'am.
Just as a follow-up to that question, 3 receipts for a restaurant, that doesn't appear to be a very good sampling of what actually happens in that establishment.
To be clear, the taxpayer did submit a long list of receipts from the taxpayer's business during the audit months. However, what was limited supply, and again, I don't want to cut off Mr. Johnson if he'd like to reply to this, was limited supply was a demonstration that this was a frequent occurrence. The takeaway was actually something that was mentioned, I believe, for the first time today. I don't recall that we discussed that at the hearing. But to that point of general practices of the restaurant, there was only one included within the 3 receipts that were submitted in the exhibits. Mr. Johnson may be able to speak to where else within the department's exhibits, which we have a pretty lengthy list of receipts. There may have been other examples, but that was the only one that the department was aware of was contained within the 3 receipts that the taxpayer submitted as part of its exhibits.
So let me ask you, Mr. Johnson, what percentage approximately, if you know, of people that go to this restaurant just pay an admission and either just order a drink or a Coke, which would be kind of expensive, and or don't order a meal?
I don't know those percentages. And the point is in giving the examples of the receipts is to demonstrate that contrary to being inextricably conjoined, the entries on the receipt are readily separable. You want this, they charge you for this. You want that, they charge you for that. It wasn't inextricably conjoined. They were instead readily separable. That's the point.
Okay, any other questions?
Mr. Chairman, this is Commissioner Byram.
Yes, ma'am.
I have a question. Let me start with the state. How unique in terms of restaurants is Blackout in Nevada?
Can you please clarify the question? I don't understand.
Okay, what I want to know is what is the most similarly situated taxpayer? Because we need to treat similarly situated taxpayers the same in fairness. And I want to know, I mean, it's a unique experience. You pay a fee to come in and you have an atmosphere that you're going to eat in, sights and sounds and smells you're going to eat in this restaurant, a separate fee to enter and a fee for the meal. Are there other venues that have a different experience plus a meal with an entry fee and a meal that you looked at?
So if I understand the question correctly, is what is a similarly situated taxpayer?
Yes. What is your most similarly situated taxpayer to this restaurant?
A high-end restaurant.
Pardon me?
A high-end restaurant.
I think if I can help clarify your question, what she's asking is, do they have any restaurants in Elko, Carson City, Reno, Sparks, Fernley, Fallon, or even in Las Vegas that turn their lights out and serve food in the dark?
No, the reference in the hearing was that there was an explanation given that this was something that was done, I believe, in Israel, and that there was a restaurant where they had servers that had visual impairments and that they had the idea from that and drew from it in creating this restaurant idea. But to your question, I believe that the closest example would be a high-end restaurant where there is a tremendous amount of money, time, and energy that goes into contemplating the layout, the decorations, and indeed the serving staff's quality. So I think a high-end restaurant would be the closest comparison. And there again, there would be the service that would be taxable.
And so this taxpayer should have known that when they started this restaurant. They should have just known that the entrance is going to be taxable. So not only are they being taxed and assessed, they're being penalized for not knowing that, even though it's really unique, a really unique situation. Is that what I'm understanding?
Well, no, they're not being penalized. And no, they should know that a service that's part of the sale is taxable because this is something that's standard across the business industry. And again, in the reply, the taxpayers acknowledge that. This is not something that's a penalization. To be very clear, this is not a penalization, nor is it a punitive action. This is a tax and an assessment and audit. That characterization is not at all supported by the record.
Okay, let me just give you some examples that come to my mind. I want to go into a museum. I pay an entrance fee that's not taxable to go into a museum, and I can see all of the exhibits. It's an experience. I might be guided in there by somebody, a guide who's explaining things, but it's an experience, and you see it and you experience it and you hear it and you might even smell it depending on the museum. And then on the way out, there are taxable gifts and the gift souvenirs that you can buy and snacks that you can buy on the way out. If you buy those, you don't have to, but if you buy those, then the entire admission fee becomes taxable. That would be an absurd result. If I go into a movie theater, I buy tickets for the experience of going into a movie theater or watch a movie, and that's not taxable. And then if I decide to go to the snack bar, I might have paid $20 to get into the theater and paid $20 for popcorn and a Coke. So it's not like it's an immaterial amount, once I buy a snack, then the admission fee becomes taxable because it's part of the atmosphere that I'm enjoying while I'm in there. It's part of what's being provided. I don't see other, parts and service invoices being as similarly situated as an entrance fee for the purpose of the atmosphere and then a taxable item sold there that makes the entrance fee taxable. So that's the kind of examples that come to my mind. And I don't think, and I'm not comfortable with this decision at all. I'm concerned. Because I just don't think that this taxpayer would have been on notice in any way that this entrance to this atmosphere in this extremely unique restaurant would become taxable once you charged for the food. And I have a question now for the taxpayer as well.
And may I answer that question if that was a question? Or respond to
May
that?
comment, yeah.
There was an example given of movie theaters, and I believe that movie theaters do have a specific tax that applies to them and how that's divided. There is an example of admission into a museum, but in each of these examples, what you're identifying is where someone's walking in and watching a movie, or they're going in to see historic artifacts or items of significant intellectual value. In this case, as we heard from the testimony, the thing that was valued most, especially by the elderly woman who testified, Swedish gal, that the reason that what she enjoyed the most was the food. When there was testimony from the other party in this case, that was, again, a person willing to come in and testify on behalf of the taxpayer in the hearing for this, they identified what was valuable to them was the food. There aren't that many vegan restaurants in town, and Blackout is, like I said, a high-end restaurant, and it deals in vegan food. That was something that inspired them to be part of the opening of the restaurant and that they returned to.
I wouldn't have enjoyed that at all. But anyway.
It sounds like really good food. Don't get me wrong. Like, I want to make sure.
A steakhouse in the dark?
Said they had good food. I don't want to at all denigrate the food.
Right. But they're paying for the experience, So, all right, let me go with the taxpayer. Excuse me. For the taxpayer, during the course of the audit, you were instructed that the tax forms were not being prepared correctly, that the full amount should be in the total sales column. Any exclusions that are proper would be taken in the exclusion or exemption column. Has the taxpayer changed the way they're reporting as a result of the audit?
Yes, we have reviewed that, and the taxpayer testified at the hearing about their misunderstanding. They talked about prior visit to the tax department to get guidance, and they acknowledged that they did not get that in writing to confirm their understanding, and that they have since made it a practice to get things in writing, but that they acknowledge that mistake. And in answer to your question, yes, they know that they need to include all of that information henceforth.
So it's grossed up. The net amount is probably going forward is still the same until the result of this?
Well, it includes all of the sales. I think previously it did not include the sales from admissions, and all of the sales from both admission meals are included now.
Okay, all right. And so during the testimony, I believe the taxpayer stated that when someone wants to come in as part of a group, but they don't want to eat, they would fill a chair that otherwise could be used to serve a meal and make money, that they have to charge that admission fee for that person so that they're not using up chairs that are valuable in this restaurant. So that was the explanation for its policy that you have to pay whether or not you're going to have any food or drink to enter and to have that experience. Is that correct?
That is correct. I mean, like any restaurant, no restaurant owner wants people coming in, sitting in, occupying a space without purchasing something. So if you come there and you're not a vegan or you don't want to eat your meal in the dark, you pay the admission fee.
And that was testified to under oath, correct?
Correct.
Okay. All right. I think that's all the questions I have for now. I just, I think we've got it all narrowed down. We're not talking about the true object. We're not talking about bundled transactions, live entertainment tax. We're talking about, is this entrance fee a service that's part of a sale? And services that are part and parcel of a sale are taxable. And there's some exceptions, but whether this service is part of a sale is the question, and I don't believe it is, but I'll leave it with that, and that's all the questions I have for now.
Okay, thank you, Commissioner. Other questions from the commission?
Yeah, Commissioner Lippman. So Commissioner Byram, I appreciate your question because I was thinking the same thing when I read these briefs regarding what's an analog. And by the way, Commissioner Bursey, I agree with you. I think the briefing is excellent. I think this is a very interesting question that, you know, should actually be a law school exam question, but it's before us. And the analogy that I would make would be to a dinner theater. And when you go to a dinner theater, I think it would be the exception. And I believe the reason they don't have receipts for someone who just wants to be admitted is, what would you do? Go into a dark room and just sit there? You couldn't even watch other people because it's dark. And so that's, you know, that's not an experience. But a dinner theater, you would pay separate admission fee to watch the show. And that then would be subject to the live entertainment tax. I understand that the Department of Tax and the taxpayer have said the live entertainment tax doesn't apply. Well, the reason it doesn't apply is because of the occupancy exception. The occupancy exception here is it's 98 people on 98 capacity, and there's an exemption below 200, below 200. Well, the anticipation for the live entertainment tax is you go in and watch a show, which takes some time. This is a restaurant where people come and go. And so they certainly in an evening would have 200 customers that would be basically filling the restaurant twice. And so I see this as carving out a fee that really is part and parcel of the restaurant food experience, similar to, I think someone, either the taxpayer or the Department of Tax, described where you go into a restaurant and there's flames and they're throwing the food around and then throw it onto your plate. That's part of the experience. There's a separate charge. So I see this as a restaurant, high-end food with a very unique experience that, frankly, I am now anxious to try.
Great.
Mr. Chair.
By the way, I agree with all that.
Mr. Chair, this is Commissioner Bursey.
Yes.
I did a really quick look through our packets, and both the taxpayer and the department's pre-hearing statements have attached as exhibits examples of the restaurant invoices. And from what I can see, and the department had a number of them attached, none of them had an example of an instance where only the admission fee was charged. And I'm only saying this for the record because I did a really quick review. It's not the determinative factor, in my opinion, at this point.
No, almost common sense would dictate you wouldn't go to a restaurant to sit in the dark. Even I'm not that weird.
But this is Las Vegas, right?
Yeah, well, that's true. No, I'm in Las Vegas, so maybe that's.
Yeah.
Maybe that's the problem. Okay. any
Weird things
questions?
take place.
That's right. This doesn't happen in Elko, Commissioner.
No, absolutely not.
This is Commissioner Witt. Might I make a comment or an observation? I was just thinking that I might decide to open a restaurant, and I will be unique in that restaurant that we're going to eat in the light. The thing that's going to set this apart is that I'm going to have a separate invoice for that opportunity to eat in the light. So what I see in this whole situation is, it's just a matter of how they've accounted for it. And because it's unique, they decided to have the perception for the humans that go here, have it be more unique because you pay, or you're at least seeing a different invoice for the dark experience. Wouldn't be any different if it was a light experience. The difference is whether I'm going to make a separate invoice for it. The more you get invoices for, the more value it perhaps creates in our minds. So I believe it's still a food experience and it's all taxable.
Mr. Chairman, this is Commissioner Rutherford.
Yes, sir.
I guess a question for Mr. Johnson, and then this is sort of getting back to your comment about this admission fee, entrance fee, however we're classifying it. You've indicated to us somebody could pay this fee, come in, presumably sit in the dark, not buy food, not buy a drink, and then leave. That's an option that the restaurant allows, or they pay the admission fee, come in, eat, drink, do whatever, and leave. And I think you've also indicated that they are now applying the tax to both the admission fee and the sale of food and beverage. What about the situation if somebody walks in, they pay the admission fee, they sit there in the dark for whatever reason that they want to do that, and then on the way out, they say, I'll take my food to go. Do you tax them then on both having been in the restaurant and sat there in the dark and taxing them on the food as they walk out the door?
Okay, Commissioner Rutherford, first, I think the early part of your question was about reporting. And I believe what I answered to the earlier question is that they are reporting all of their sales for admission and sales for the meals, whereas they were previously not reporting the sales for the admission on the monthly tax returns.
Right.
Just to clarify, now in your hypothetical where a person could, based on how the receipts and how the business operates, you could go in, if you want to go in and sit and whatever and avail yourself of the experience, you could. They would charge you the $45 admission fee if they, on the way out, under your hypothetical, said, I want to get some food to go, then obviously that meal would be taxable. And the service of that meal would be included in the sale of that meal. So the meal would be taxable, but I'm guessing your question goes to, would they then turn around and pay the sales tax on the admission charge?
Correct.
Okay. Under this scenario, the admission charge is not a service. And we've maintained that the charge was for admission, not for a service. So there would not be a tax on the admission charge.
Okay. I mean, this is, and I will agree with Commissioner Littman. I think this is very well briefed and the arguments are superb. And you're probably right. This is probably a case note for law school. But I think to Commissioner Byram's point, you have the ability to pay an admission, go in there. I'm not the type of person who would do that, pay the admission, go in there and sit in the dark. If I want to do that, I can just sit in the dark anywhere. But I guess there are people that are willing to do that. And maybe that is a very small percentage of the overall business and they leave. The real question is if I go in, I pay the admission fee, I sit there and I order food and beverage, is the sitting in the dark, the admission, the experience to be part of that food sitting in that I eat in the restaurant? And, this is unique. This is no doubt about it.
Mr. Chairman, may I ask a question?
Yes.
Commissioner Byram, the state, I'm sorry, I can't remember your name.
That's Commissioner
testified,
Michael Veets.
Mr. Bute, I'm sorry. You testified that they're not being penalized. And in the documents, it says their penalty is the amount of 17,820. Has that been dropped?
I never testified.
You're testifying right now. You're in this
Argument
hearing. Pardon me, you're in this hearing telling me that they're not being penalized, and I'm just asking you, has the penalty that's in the brief of 17,000 been dropped?
No, I don't believe so.
So they are being penalized for not having guessed this tax treatment.
There is no punitive or penalty for not having guessed because this is not a matter of guessing or not guessing. You're being penalized because that's what's required in statute. That is not the same as a punitive action or taking penalty because of not guessing something.
Mr. Chairman, I'd like to make a motion.
Okay,
Mr. Chairman, I did not get a chance to offer a rebuttal to Mr. Veets.
last part,
Yeah, well, he had,
the penalty part.
yeah, I made an opening statement.
Oh, you're right. Okay, you want the last word. You can have it
Thank you.
briefly.
Thank you, sir. Very briefly, with regards to the ALJ determining that the substance prevails over the form, the ALJ said that the substance of the transaction was for serving food and drinks, and that was a service as part of the sale and therefore taxable. The sale included the serving of food and drinks and therefore taxable. And so I would just urge the commission not to interpret and apply the statutes in a manner that the same activity in the same transaction could be taxed twice. The other thing that was mentioned by Mr. Veets about the regulations and how they're different from here, the common denominator is that where the statute says you tax any services that are part of the sale, the only way you could have adopted regulations carving out service after service after service is that they're not a part of the sale when they're separately stated on the invoice. That's language from existing regulations. Separately stated on the invoice excludes from taxation those instances listed in the examples that we talked about. He talked about how the petitioner used the term service. The petitioner testified that she had no legal training in what the term service meant for purposes of Nevada tax law. And even if she did use the term service, at no point did she ever say that it was a taxable service or that it was a taxable service as part of the sale. And with regards to the taxpayer saying that the cost went to service, that was on cross-examination by Mr. Veets. On redirect, the taxpayer said she uses the revenue from food and admission sales, quote, to operate the business, meaning it wasn't just for services. And there was a point where the department's counsel asked audit supervisor Roger Hovendick, was there ever any discussion about where the $45 admission fee went to? And Mr. Hovendick replied, quote, there was never a discussion, nor did we inquire, end quote. If that's your theory of the case, that this was the charges were for a service and the service was part of the sale, wouldn't you discuss? Wouldn't you audit that as auditors? Wouldn't you follow the trail? Wouldn't you establish that in trying to prove up your case? But never a discussion, never an inquiry is what he had testified to. And then I wanted to just touch on the fact that, yes, this is a restaurant, but people came to this restaurant for more than the food. If you look at the testimony of the customers that we referenced in the briefs, they talked about how it was a surreal experience. It was an interesting and fun experience. It was like dinner and a show. So it was equal parts meal and attraction, with the attraction having an admission charge. And as I've said before, the department cited to no statute, no regulation, no case that says this meets the definition separate and apart from the statute, including serving a meal as part of the sale. They cite to nothing that says dining in the dark is a taxable service or a service, and it's not in the audit report, contrary to the representations made here today. And the last thing I want to finish is we've grappled with this for a bit. We've grappled with this amongst ourselves for quite a period of time, but the court has said that tax laws must be clear, they must say what they mean, there must be requisite clarity. If the minds in this room, if the minds on this commission are struggling with this and bandying about, how do you know? What is this? How can you tell? What does this work? How does this work? How is a normal, reasonable taxpayer supposed to grapple with this? Where is the clarity in the law? Where is the clarity in the law that our Nevada Supreme Court said must exist? And if there is any doubt about the validity of a tax statute, our Supreme Court and our legislature have said you, the tax commission, should resolve that doubt in favor of the taxpayer. Thank you.
Okay, thank you very much.
Mr. Chairman,
Yes. Go
Commissioner
ahead.
Byram. This is Commissioner Byram. I would make a motion in the regard to the Blackout Inc. matter that we overturn the administrative law judge's decision.
Commissioner Bursey seconds.
Okay, I have a motion and a second for the discussion. All in favor, say aye.
Aye.
All opposed, nay.
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 Nay. Motion fails.
Can we get a roll call just for the record of what that was, what the vote?
Yeah, we can. It was 6-2, but Tina, would you make a roll call, please?
Yes. Commissioner Littman,
Nay.
Commissioner Bursey,
Aye.
Commissioner Rotifer,
Aye.
Commissioner Brown,
Nay.
Commissioner Johnson,
Nay.
Commissioner Byram,
Aye.
Commissioner Witt,
Nay.
and Chairman Wren.
Nay.
Mr. Chairman, this is Commissioner Byram.
Yes.
I would like to propose another motion. And under this motion, I would little background first. I think that this is a very close call. And because of that, for exactly what Mr. Johnson said, that it should go into favor of the taxpayer. For this period of the audit, if we were to overturn the audit, but then on a go forward basis, beginning with the next filing period going forward, allow for this taxpayer to then collect the sales tax. If we're going to determine that that's service, that's part of the sale, they can then collect the sales tax and report it going forward in a prospective decision, rather than having to pay sales tax that they weren't under any knowledge they needed to collect in prior periods or be assessed penalty and interest on that. So if I were to make a motion, let me just start fresh now. That's my thinking. Would be, I would move to overturn the administrative law judge's audit result, but enforce the decision on a go forward basis that prospectively sales tax be included on the service of admission that's part of the sale.
This is Chairman Wren, just as a comment to that motion to start off with. My concern with that is that the taxes owed are $178,237. That's a big tax liability that we're writing off and saying, well, you didn't understand, now go forward and do it right.
I'm not saying they didn't understand. I'm saying they had absolutely no notice nor were the statutes and regulations clear that they should have collected tax on that.
Okay, that's
So-
fine, thank you. So there's a motion, is there a motion? Do I have a second?
I'd like clarity on that. So obviously, because justice is slow, the time has passed since that audit. And so are you talking about starting tomorrow? Or because quite a bit of time has passed since the audit period.
And since there hasn't been a decision, they've been filing consistently tax wise. They've corrected how they're grossing it up rather than netting, but
No, they're not.
filing-
Yeah, no, so they're still exempting the admission.
But they're grossing them up on the form like they're supposed to, but they're still exempting it, correct? So they haven't made a change because a taxpayer wouldn't make a change if they felt very strongly about the position they were
I
taking in an
agree.
appeal.
So you're suggesting they should comply starting tomorrow or,
Yep.
so it's
And there's
more,
thinking about that, I don't think that's really a possible thing to do unless we say we uphold the decision, but wipe out the prior period tax and they go forward, compliant with the decision. So I don't know if we can actually do that. We have
Yeah.
legal counsel. Is there legal counsel down there?
Well, I'm looking around to see if anybody wants to come forward, like Mr. Pope, and talk to us. Oh, thank you.
Hello, David Pope with the Attorney General's Office on behalf of the department.
So.
Can you please repeat the question? I'm not quite clear.
Thank you.
Yeah.
Mr. Pope, this is Commissioner Byram. We have a case here that includes a taxpayer's assessment, administrative law judge's decision upholding that assessment. And for a very unique restaurant, a very unique situation where in the audit, it was determined that they owed a substantial amount of tax, so about $200,000 or so. If you include penalty and interest, $230,000 on the most recent one that I'm looking at. So it is a really close call. In my opinion, it may not be a service that's part of the sale, but there's a split decision on the commission as to whether it should be. But because there's a split decision, that means that there isn't clarity in the law. And we're assuming this taxpayer should have been clear, should have collected those taxes all along and submitted them to the state, but they did not. So they have not had the benefit of any instruction. They don't have a detrimental reliance argument. They're just saying that they've come to this point and don't believe and still don't believe that that service is taxable. And I tend to agree with them. But if we were to act now to say that we uphold the administrative law judge's decision on the technical merits, but waive the audit result and request that the taxpayer going forward begin to collect tax on that consistent with the decision of the state or consistent with the instruction of the state. That leaves the audit period clean, but then a period between the end of the audit and now where tax hasn't been collected because it wasn't known yet. But if we were to start going forward with the month of August, collecting the sales tax and then complying with the legal merits of the administrative law judge's decision. Is that a possible decision that we can make?
If I just to paraphrase that, if I'm understanding, it's the question is whether a decision by the commission could be enforced going forward. And I would say that administrative res judicata would require the taxpayer to comply with the decision. So yes. If there's
On
another
a go forward basis, or would they have to, our authority is then just to approve it, deny it, approve it and modify it as to dollar amount?
I guess I'm not understanding a part of that.
So we don't really have the authority to say, starting now and going forward, collect the tax, but you don't know it in the past.
So if you would like, I could get back to you on that and really look into it. But there's a section in chapter 233B that allows the agency to settle and then you can also issue a decision. So perhaps a harmonization gets you to that outcome. So I just, I guess I would prefer to look into that and issue you some advice if you would want to bring it back to the next meeting.
Commissioner Byram, this is Chairman Wren. I wonder if both parties might be better served by us sending this back to the parties to come up with an offering compromise or a solution? Can we do that?
I would agree with that if they're willing.
Settlement, yeah, a settlement. See if they can come up with a settlement, just table it. Both sides have heard their arguments. I think both sides agree with each other a little bit and see if they can settle it. And then they could go forward as you're suggesting.
Mr. Johnson, would that work with you?
Well, I want to add that you have the ability to affirm the decision, reject the decision, or you can modify the decision. And so that is an option that's available to you here and now today.
I'm happy to put forward a motion.
Okay, there was a motion on the floor, but there wasn't a second, so I'll entertain a new motion.
Although, should we wait to hear if there's a second? Did we give it? Commissioner Byram, are you okay with me moving forward or?
Commissioner Lippman, I would withdraw my motion.
Okay, thank you very much.
Okay, thank you. So I would move to uphold the ALJ's decision in the taxpayer appeal of Blackout Inc.
This is Commissioner Brown, I would second.
Yeah, let me think. I've got a motion and a second. I'm going to just go ahead and call for a roll call vote. Tina, call the vote, please.
Yes, Commissioner Littman,
Yes.
Commissioner Bursey.
Nay.
I'm sorry, that was nay?
Yes, that was a no.
Okay, thank you. Commissioner Rutherford,
No.
Brown,
Yes.
Commissioner Johnson,
No.
Commissioner Byram,
No.
Commissioner Witt,
Yes.
and Chairman Wren.
No. So motion fails.
Mr. Chairman, may I ask a question? Commissioner Byram?
Yes.
With a motion either way to affirm or deny it, do these parties still have a chance to then go back and enter into a settlement agreement?
Thank you for asking that because I was trying to figure out how to ask that during the last motion. So if I get legal advice there, please, sir.
Thank you, Chairman Run. So if I understand the question, it's if the commission issues a decision today, do the parties still have the ability to settle the case? And yes, they do. I mean, there's a time limit after the decision is issued for the taxpayer to pursue a petition for judicial review. And if they do that, then they keep their appeal rights open. And if they don't, then it becomes a final decision. They can try to negotiate sometime in between there or anytime after.
So my understanding of the law, remind everybody, I'm not an attorney. If we uphold the ALJ, the taxpayer has the ability to come back to the state and try to make a different settlement, or they can take it to district court and get a court judgment on our decision.
That's correct.
Which sometimes is not a bad idea. So, okay. So that answers my questions. Did that answer yours, Commissioner?
So, Commissioner Byram, so our options in order to get to a negotiation would be either to table it, send it back, or to approve it.
Yes.
Is that correct? There's no other third option in order to get it back to negotiation?
Well, no, I don't think that's true. You know, we could my understanding is we can uphold everything that the ALJ said, and we can modify that and say, listen, you said they owe the entire tax. We could cut that in half. Yes, we have options, and that was my concern earlier, is that it's such a large amount of tax that if we agree they're going to go forward and pay the taxes they should be paying, then they should be liable for some of the taxes from the past.
And Mr. Chairman, if we were to just uphold the decision as is, which we just now voted not to, that then when they go to negotiate, puts the taxpayer at a disadvantage in negotiation, in my understanding. So
Okay,
because this is a split decision, if I were to move, and I'm not doing it yet, if I were to move to uphold it and modify the dollar amount to be 50% of what it is, 50% of the tax and the interest and zero penalty, or 50% of the penalty, you know, I just feel bad that they're being penalized on something they couldn't have known. That would be a possible motion that I could make.
yes, and one that I would tell you up front, I would support.
Excuse me, may I ask a question? I'm sorry, Commissioner Byron, but this goes to your possible motion. I thought we just voted to not to uphold the ALJ's decision.
You know, we did, and Commissioner Bursey, the reason that I went against it is because I wanted further clarification of whether or not we could modify that decision, which we got after the vote, so.
So where we stand is we have had a motion to deny it or to overturn it, and that failed. And when a motion to approve it, that failed. And Mr. Chairman, I would like to make a motion to uphold the decision, but to modify the resulting assessment to 50% of what is currently assessed.
Okay, and any waivement of taxes and penalty?
50%.
Interest and penalty
50%.
of taxes, interest, and penalty.
Yeah, I think that would be easiest.
So off the top of my head, approximately $111,000. Okay,
For clarity, is that, so what happens after the audit period? Commissioner Byram?
That would mean it would be subject to tax.
Thank
Not
you.
only going forward, but in the interim period that has already passed.
Yes, thank you. I'm happy to support that. I'll second the motion.
okay, thank you. I have a motion and a second. Do we need clarification?
Yes, Mr. Chair, if I may, Vonda Bars Goodson for the record. Could we just get clarification on the motion? Commissioner Byram, you indicated 50% discount on the tax, interest, and penalty.
Yes.
So the total amount was, and we'll let staff do the paperwork, but the total due was $222,412.19. Off the top of my head, that would make the current balance $111,206.08.
In the paragraph below, it was modified. The numbers were modified after some additional time.
Oh, were they? Okay, then same thing. We're at 50%. So I have.
Again, Mr. Chair, one additional clarification. What date would we be calculating that payment through for purposes of staff coordinating that? Through the end of the audit period? Is that for interest?
Yes. Usually you do it at the decision date to the end of the month, but.
Yeah. Okay, very good. I have a motion and a second. Further discussion.
Yes, Mr. Chairman, it's Commissioner Brown.
Yes, sir.
My question is for the Taxpayers Council, and that is, if this motion passes as it's been stated, does this resolve the matter for the taxpayer, or does it remain unresolved? And you know, I don't want to ask you if you're going to file a lawsuit or not, but if this doesn't resolve it, that perhaps impacts my decision.
Well, if the motion is made to modify the tax amount and then an order issues from the commission modifying the decision to 50%, then I would get that order and discuss it with my client and say, okay, do you accept or reject what the commission did by way of its modification?
You can't remove their right. They still have a right to appeal.
Yeah, so I guess I appreciate the answer and I appreciate the position, and you haven't had an opportunity to check with your client, but to me, this doesn't resolve the matter. I have no assurance that our action will resolve the matter.
Commissioner Wren? Here, this is Commissioner Bursey. I'm going to vote no because I continue to agree with the taxpayers' arguments.
Okay, well, first of all, let me call for the vote then. Tina, take a roll call, please.
Commissioner Littman,
Yes.
Commissioner Bursey,
No, for the reasons stated.
Commissioner Rutherford,
No, because I believe there's just too much ambiguity and the taxpayer needs some certainty with regard to taxes.
Commissioner Brown,
No.
Commissioner Johnson,
Yes.
Commissioner Byram,
Yes.
Commissioner Witt,
No.
and Chairman Wren.
Yes. So motion fails. So I guess.
Mr.
maybe-
Chairman,
It's actually,
Go ahead.
Commissioner Byram, given that the initial decision to overturn the administrative law judge's decision in its entirety failed, but with the discussion that we've had since then, if we were to make that motion again and see where we stand, because I think that we've got a little more of an understanding now about how unfair this is, unique situation, unclear requirement. Would that help?
I'm not sure that vote was 5-3.
Okay.
The uphold was 3-6. We're going to vote on it 5-3, but I think maybe we might be better off upholding the decision, letting them try to figure it out and or give them the opportunities of their other remedies.
Chairman, I'm wondering, what about upholding the ALJ's decision and eliminating the penalties and interest? Does that make it more palatable for some?
No, I can't answer for them, but that would be more money because the last one dropped it in half. Yours would just drop the penalties and interest in half, and they'd still have $178,000 in tax liability. So financially, one that failed economically, I would think would be a better deal for the taxpayer.
This is Commissioner Witt. May I make a comment?
Yes.
For some reason, being a farmer, trying to think through this again, I do believe that there is a worthwhile legal situation here, because I agree, both sides. It's very interesting. It was interesting to read and been very interesting to discuss it. One point, though, is that every taxpayer has a right to contact the department and ask for a ruling. And I believe that it was mentioned in the brief that that didn't happen. So I don't feel so bad, because if you want to know for sure whether you're going to be liable for anything, a good way to start is ask the department for a ruling. So when people don't do that, I don't like to set a precedence of reducing liability because it's an interesting legal case. Does that make any sense? Ken, I'm a farmer. We grow stuff. You know,
I'm a appraiser. I understand what you're saying. I didn't like your restaurant idea that you sell manure, but that's.
Yeah.
And to complement that excellent comment, I would say taxpayer has the burden of proof, and we're he nor she nor they have achieved that because we're still at loggerheads.
Right on. So make another motion, Commissioner.
Mr.
Okay.
Chairman. It is true that the taxpayer has the burden of proof, but also we're required by law, if there's ambiguity in a taxing statute, to rule in favor of the taxpayer. So if there was ambiguity in the encyclopedia, there'd be a picture of the Blackout restaurant next to it. But I'll let you go ahead and make a motion.
Yeah, I don't see ambiguity, but perhaps it's because I'm in the dark. But and I'd be happy to I look forward to breaking bread with you at the Blackout restaurant, Commissioner Byram. So should I try again? I'm kind of open to ideas, but I'm thinking of upholding the ALJ's decision and then letting the taxpayer appeal it or try to negotiate a settlement.
I like that idea.
Thank you. All right. I would move to uphold the ALJ's decision in the Blackout Inc. restaurant.
Commissioner Witt, second.
I have a motion and a second. Seeing no further discussion, Tina, take a roll call vote, please.
Yes. Commissioner Littman,
Yes.
Commissioner Bursey,
No.
Commissioner Rutherford,
No.
Commissioner Brown,
Yes.
Commissioner Johnson,
Yes.
Commissioner Byram,
Yes.
Commissioner Witt,
Yes.
and Chair Wren.
Yes. Motion passes. Thank you very much. As has been said, this was truly very interesting. The jokes were to help lighten it a little bit. I would suggest you try to get together and see if you can resolve it to a better situation for both of you. If not, you understand your option. So thank you very much.
Thank you.
It is 10
Thank you
after
very
11.
much.
10 after 11. Let's take 10 minutes. We'll reconvene at 11:20. Thank you very much.
Commissioner Witt.
Yes.
Yes, I would think in your restaurant, you would at least have a petting zoo type experience.
Thank you, Tina. Is everybody back there and back on Zoom?
Yes.
I made that judgment.
Did she answer?
Is
Tina?
Can you hear us?
It's like your kids,
Yeah. Is everybody back?
Yes.
With a black brains. Well,
Somebody needs to,
no, you don't like brains. It's because you mentally say, I'm not gonna eat
you're on
brains.
Zoom, mute, please. Okay, we're back on the record. Chief Deputy, next case, please.
Yes, thank you, Mr. Chair. We are on item 5C2, which is taxpayers' appeal of administrative law judge's decision pursuant to NRS 360.245 and NAC 360.175 in the matter of Nevada Restaurant Services. On behalf of the department, we have Deputy Attorney General Michael Viets, and on behalf of the taxpayer, Stephen Hollingworth.
Very good, gentlemen. If you both would identify yourselves for the record, spell your names, and then I will let the taxpayer go first.
Hi, this is Stephen Hollingworth, Counsel for Nevada Restaurant Services. My name is spelled Steven. Last name is spelled Hollingworth.
Thank you very much.
Good morning. For the department, Michael Beats, bar number 14640. Last name is spelled V as in Victor, I as in India, E as in Echo, T as in Tango, S as in Sierra.
Okay, this is the taxpayers appeal, sir, so go ahead.
Yes, the issue here is the sales and use tax treatment of a aircraft purchase by the taxpayer from an out-of-state seller. So it's a use tax issue. The taxpayer has argued and briefed that the sale should be exempt from use tax on two independent grounds. The first being an occasional sale, which is NRS 372.035. And the second grounds is a statutory presumption that the property was for use in interstate commerce and it would be exempt from use tax. That is NRS 372.258. So at the administrative hearing, the judge issued her decision, and we believe it made some very serious errors of law and fact on both of these counts. And I'll go through them briefly as I can to summarize, I think, the more serious ones that warrant reversal. The first issue is the occasional sale. And as those of you who have recall, that the background of that is in the state of Nevada, a seller is not required to have a sales permit if the seller makes no more than 2 sales in a 12-month period. And a sale by a seller who does not have required to have a sales permit is exempt from use and sales tax by reason of a deemed occasional sale. There is the issue, though, and in this case, which is kind of the complex one, is how does the taxpayer prove a negative, prove that a sales by the seller, by another party, have not actually ever occurred? Well, the sole published guidance on this issue in the state of Nevada is a Nevada tax notes issued by the department that said that if you are a business, you would be, quote, advised to keep documentation from the seller stating that the sale of the motorcycle or the property was in fact an occasional sale in case of audit. So we have documentation from the seller stating that the occasional sale applies. In the taxpayer's case, the purchase agreement reflects very much close attention to this issue. In fact, the Taxpayers Council did more than just what the department recommended. We have 3 separate representations, covenants, and warranties from the seller, all dealing with this issue. We have a section 6.6 where the seller represents and warrants to the buyer. The seller does not hold a permit or license authorizing it to sell tangible personal property at retail and has not sold more than 1 item of tangible personal property during the preceding 12 months. There is a covenant in section 1119 that says that the seller will not take any action contrary to that representation throughout the closing. And the seller was required to reaffirm that. So we have a belt and suspenders and an extra set of suspenders where this is affirmed a 3rd time. And this is no light matter. This was in the purchase agreement, this is a precondition to the sale. It is a representation and warranty and covenant that survives the closing. So if it turns out to be inaccurate, the seller is exposed to substantial penalties and breach of contract. So we believe that this is more than follows what the recommendations that the department has put forth for substantiating the occasional sale exception being applicable to this purchase. I should also note that the Nevada tax notes is consistent with several other jurisdictions that we mentioned in our briefs. We mentioned Illinois and Nebraska and Idaho having some very similar representation. So, and we think that the department should be held to the standard that it enunciated in the tax notes, that it is fair and reasonable and that the taxpayers are entitled to rely in good faith upon the pronouncements of the department. And the department cannot move the goalposts by demanding additional documentation for the first time on audit. The egregious factual error that the judge made relates to the reliability of the seller's representations. There's a excuse me. To understand the nature of this error, I need to give you a little bit of background. The department in its pre-hearing statement put forward a number of sales that the seller had done of airplanes, several airplanes, and asserted that these were evidence that the seller was actually a retailer who made more than 2 sales in a 12-month period. The taxpayer's witness did research on this and pulled the FAA records, and we submitted these in a supplemental hearing statement to the judge, and along with an explanation and summary showing that none of these sales occurred at a time and in a manner that would have disqualified the occasional sale. What the problem is, our witness actually mentioned this research that he had done. In the hearing transcript, he mentions, for example, the department attorney asked, earlier you testified that you assisted Nevada Restaurant Services in looking at the FAA records of LD Services in the sale of its aircraft. And the witness answered, what I testified to was that when the department identified aircraft and asserted that those aircraft were all sold within the 12-month period beforehand, I obtained the records to assess whether that was accurate or not. And as I said earlier, it's not. Unfortunately, somehow the judge after the hearing and before issuing the decision became confused on this key issue and this unequivocal testimony, and found as a finding of fact that Mr. Zeidinger, the taxpayer's witness, admitted that after the department issued the assessment against NRSI, he researched LD Services and discovered that LD Services representations to NRSI regarding its other sales were inaccurate. That takes the witness's testimony and turns it on its head. Instead of the witness who unequivocally testified it was the department's representations and arguments relating to those sales that was inaccurate, the judge somehow determined that it was the seller's representations that were inaccurate. This is obviously an extremely prejudicial error because it shows it made the judge's decision very easy that if the seller's representations were in fact inaccurate to this key issue, then obviously the taxpayer failed to support and sustain the occasional sale exception. Because that's clearly contrary to the record and the exact opposite of what the taxpayer's witness actually said. We believe that on its own warrants reversal in this case. The second grounds for exempt status for this sale relates to the statutory presumption it relates mostly to aircraft and vehicles used to transport personnel and other cargo. There is a controlling Supreme Court case in Nevada, the Harrah's Operating Company versus the Nevada Department of Taxation, which goes through this statute and interprets it. And this case was one that we had briefed to the judge. We had mentioned it also in the oral hearing, but the judge completely failed to even mention this case and interpreted the statute directly contrary to how the Supreme Court has interpreted it. Let me go through those facts just basically. In Harrah's, a very, very similar fact pattern to what we have here emerged. We have Harrah's buying some aircraft, taking delivery of the aircraft in Oregon, flying it first to a flight completely out of the state of Nevada, and then flying the aircraft to Las Vegas. And then the first prong of the statute means that it requires the taxpayers to, when they purchase an aircraft from an out-of-state seller out of state, that the first flight be entirely outside of the state of Nevada. In Harris, the department raised an argument and said, well, hold on, you continued your flight. You landed outside of the state, but then you continued on in the same day to land in Las Vegas. The Nevada Supreme Court said that's immaterial. You satisfy the first prong by that first flight where you took off out of state and landed out of state. The second prong relates to the use of the aircraft over the next 12 months. And as long as you are using that in interstate commerce and not exclusively in Nevada, you will qualify for this presumption that it is. And the Nevada Supreme Court looked at the Harris flight records and found that most, but not all, of the flights, not surprisingly, were originated from Las Vegas, but most, but not all, were in across state lines. And the Nevada Supreme Court found that you've satisfied the second prong, and the exemption applies. So in our current case, we have facts, we've established facts that are substantially identical to those in the Harris case. We have submitted a bill of sale and a notarized receipt in the state of Montana, where the taxpayer took delivery of the airplane. We have flight records and testimony of our witness who was in contact with the pilot at all times during this transaction. We showing that the plane took off from Bozeman, Montana, and landed in Phoenix Mesa Airport. There's some confusion where there needed to be. The department in its pre-hearing statement was well aware that the airport was called Phoenix Mesa. So sometimes in the record, you will see references to Phoenix, and sometimes you'll see reference to Mesa. They're clearly referring to the same airport. Then we have so the first flight took place entirely outside of the state of Nevada. We have satisfied the first prong. The second prong relates to the use of the plane in interstate commerce. We've submitted flight record summary and flight records showing that the plane over the next 12 months flew to, I believe it's over 11 different states, and 80% of its flight time was across state lines. The problem with the judge's opinion is the judge failed to apply the Harris ruling. On the first prong, flight that it must be entirely out of state, the ALJ faulted the taxpayer for failing to establish why the first segment of the flight from Bozeman to Arizona should be treated as a separate flight from the second segment from Arizona to Nevada for purposes of the statute. This is exactly the argument that the Nevada Supreme Court rejected previously. On the second prong, the ALJ asserted, without citing any authority for this position, that the numerous flights in the flight log summary originating or terminating in Nevada cannot qualify as a use of the Cessna outside the state. Again, this is contrary both to the Nevada Supreme Court and the express language of the statute itself, that the issue is not where the flights originated from, it is, did they cross state lines? And the factual finding that the judge made earlier in the decision and repeated by the department in its answer, that the taxpayer had purchased this plane for use of flying its executives between Reno and Las Vegas, is simply contrary to the record. We submit that these errors warrant reversal, that they are contrary to the plain reading of the factual record before the judge, and that they fail to apply the appropriate law.
All right, thank you very much. Any questions from the commissioners of the taxpayer?
Mr. Chairman, I do have one question. This is Commissioner Brown.
Yes, sir.
Thank you. I did review the records and do see that it was demonstrated that there were no sales in the rolling 12-month period, meaning 12 months prior or 12 months subsequent to the transaction. But one thing in my mind that wasn't addressed was the statute, as I understand it, talks about not only sales, but leases. And the lease portion, I don't remember being addressed. And I just wonder if there's some representation that you could make that no leases occurred that would impact the occasional sale rule during that time frame as well.
Yes, thank you. The witness testified that he was intimately involved in drafting and negotiating the purchase contract, that leases were intended to be covered. Now, he did not articulate fully why that was the case. And give me a moment here. The exact language that he negotiated was that the seller does not hold a permit or license authorizing it to sell tangible personal property at retail. The seller was located in the state of Texas. It was a Texas limited partnership. Texas has laws very similar to Nevada, in that any seller of property, more than two sales in a 12-month period, is required to obtain a sales permit. Nevada, as well as Texas, defines, and this is Texas Tax Code Section 151.00, says a sale or purchase, this is the Texas statute, sale or purchase means any of the following when done or performed for consideration: the exchange, barter, lease, or rental of tangible personal property. So where the seller is representing that they were not required to obtain a sales permit in Texas, they were effectively representing that they did not sell or lease any property that would otherwise have required them to obtain that sales tax permit.
Thank you.
Okay, any other questions of the taxpayer?
Mr. Chairman, this is Commissioner Byram.
Yes.
I wanted to understand why the taxpayer didn't provide the actual flight logs to the state and rather did a summary that they prepared that may or may not have been quite accurate.
Yeah, the reason for that was simply intended to be an aid in purposes of the analysis. The flight logs themselves are lengthy and have a lot of handwritten art, chicken scratch in them. The intent was to prepare and summarize in a format that the department could understand and follow, that would show how the statute was applicable to those flight records. The department never actually asked for the flight records at any time. And so we submitted those only when it became apparent in the judge's opinion for the first time that the judge had concerns about those. We were never requested those, but we wanted to submit those to show that in fact, that the flight summary was substantially accurate. There were some minor errors, but 97 to 98% correct, with very few transcription errors, good for an A in most schools. And we believe it shows that we were substantially correct and upfront with the department throughout these proceedings.
Thank you.
Okay, any other questions?
Commissioner Lippman, I'm not sure the taxpayer can answer this question, but why was the transaction affected out of Montana?
I do not know the answer to that one offhand, no. That was a question that our witness could have answered at the hearing, but he was not asked that question.
Okay, thank you.
Okay, go to the department.
Good morning, Mike Beats for the department. This matters before the commission to determine whether or not the petitioner has demonstrated a violation of 233B 135.3, and if shown, whether they have demonstrated that a substantial or a prejudice to a substantial right is followed. The department submits that the petitioner has not demonstrated either, and that the commission should uphold the decision because the ALJ correctly determined that the petitioner failed to demonstrate at hearing the applicability of the interstate presumption set up in 372258 and the occasional sale exception. To a preliminary matter, there is newly submitted evidence in this case, and the department has submitted in its brief its explanation in opposition to the consideration of the newly submitted flight logs. I'm happy to answer questions on it, but given that it is a preliminary matter and it's likely already been reviewed, I'll move on to the next point. The petitioner's reply alleges that the department is making a hearsay objection, but it is not. Rather, the department is arguing that the ALJ's exercise of discretion was correct in response to the petitioner's allegations that there was an error in her assessment. And through 43 pages and 202 footnotes, the department demonstrates the appropriateness and the exercise of her discretion in her capacity as hearing officer. To that point, and going in reverse order of the arguments heard from the petitioner today, the last point touched on was the last basis upon which that they claimed the tax of the purchase of the airplane should not apply, was a discussion of interstate exemption or interstate presumption set forth in 372-258. To be clear, the petitioner is correct. And upon review of the record of the ALJ, it does appear that the ALJ made an error in the interpretation and application of the Harris case, specifically as it relates to 372-258-1 subsection A. That section requires that the first use of a plane in state be used in interstate commerce. Interstate commerce is defined in statute and expanded upon in that Harris decision that the petitioner cited today in their arguments, and both parties have cited in their brief. That Harris decision does, as the petitioner has represented, count a flight that begins in one state, continues to another, and then ultimately lands in Nevada as constituting interstate commerce. That term interstate commerce is defined in 372-258 subsection 2A2. That specific definition is what the Harris case concerned, and it did expand upon it to say that a flight could still constitute interstate commerce under those conditions. So the department acknowledges that is not entirely consistent with the Harris decision. However, that inconsistency is not fatal to the determination that the ALJ made, because there are two prongs to the test of 372-258. Those are both set forth in subsection 1, parts A and B. Parts A, as discussed, reflect that the first use of the flight must be in interstate commerce. However, part B requires that it be used continuously in interstate commerce for the 12 months following that first use, and not exclusively in the state of Nevada. That language, not exclusively, is where the ALJ correctly found that this use of the plane did not qualify for the presumption of interstate use. As noted in the ALJ's decision, there were multiple flights that took off and then landed in the state of Nevada. Those flights represent that the states, or that the petitioner's use of the plane was exclusively within the state. There are multiple instances of that where the flight begins and lands in the state of Nevada, and every leg in between is within the state of Nevada. That is exclusively in the state of Nevada. Because there is a prohibition in 372-258, part 1, paragraph B, that does not allow the applicability of the interstate presumption upon the use of a plane if it's used exclusively in the state, and if, as is the case, where the ALJ makes an error with regard to the first element of the test, because this is a multi-element test and a conjunctive test, the taxpayer must still demonstrate the applicability of that second element. And here, because of that exclusive use in the state in the 12 months following its purchase, they have not done so. Turning to the occasional sale exception, there was a question posed of leases, and as it relates to the hearing transcript, there are some 150 pages replete with several questions on the details of this transaction. One of those questions was about leases in other states. In this case, it is important to understand that the taxpayer's sole witness, Mr. Zeitinger, identified that he had no knowledge of the seller until, and really only what he learned when there was this tax dispute. Nevertheless, Mr. Zeitinger represented that their sales contract considered and contemplated leases. This is contradictory to his statement that he knew nothing of the activity and business of the seller, because there is no indication that in the contract, leases were treated tantamount as sales. Though Texas was cited as an authority today, and I do not doubt the accuracy of the petitioner's representations regarding the statutes in Texas, those were not discussed at hearing as to say that this is how the term is interpreted for the purposes of the contract. To that question, that has not been answered in the affirmative, that a lease constitutes the same as the sale, because it has not been shown to constitute the same as a sale. This is an inference made by the taxpayer's witness, as he acknowledged in his testimony, that it was his treatment of it because he believed and he understood that leases are treated the same as sales. However, as stated, there's nothing in the contract that expressly states that a lease is treated the same as a sale, and Mr. Zeitinger admitted he had no knowledge of the seller apart from what he learned during this tax dispute. That is also why, even though, as the petitioner correctly states, there was a misunderstanding on the part of the ALJ on whether or not the representation regarding the sales of 5 planes by the seller in the 12 months prior to the purchase of the plane at issue here, that misunderstanding does not and still cannot show that the occasional sale applies. Rather, it's a misunderstanding by the part of the ALJ, but it is not fatal to this case. That last case, though, or rather this last misunderstanding, goes more towards credibility and the ALJ's assessment of evidence than it goes to the occasional sale exception. And that's something that pervades all of the assessment by the ALJ in this case. The ALJ's assessment was not based entirely upon this one misunderstanding, however. And indeed, the ALJ's decision identifies an inconsistency, well, several inconsistencies in the evidence presented by the petitioner at hearing. One highlights one of the questions that the ALJ posed in her decision, but has not been answered in the answer or in the appellate brief, in the reply, in the submission of additional exhibits, or today in argumentation. That one exhibit that is inconsistent, and I believe is emblematic of the inconsistencies the ALJ had issues with, is a receipt created by a third party on May 15th, 2017, the date of the sale. That receipt was offered in evidence by the petitioner. It identifies the afternoon of May 15th of 2017. The taxpayer shows that there was a purchase of fuel for the plane by a company based out of Texas from an airport in Bullhead City, Arizona. This inconsistency is important because this was at a time that the NRSI's logs represent that the plane was 246 miles away in Mesa, Arizona. The logs also omit any activity showing that it had flown to Bullhead City. And the entirety of the basis of testimony from Mr. Zeitinger with regard to the activities of the plane on May 15th, as he explained, were from what he received from the pilot. That pilot, according to his testimony, had called Mr. Zeitinger and he had conversed with him about the plane landing in Mesa, Arizona and purchasing fuel. This is all at odds with the third-party created document reflecting that the plane was 246 miles away in Bullhead City on the date and time in question. As this is critical, because the flight's path is determinative and can be impactful upon the ALJ's outcome and evaluation of evidence and determination with regard to 372258. This was something that was pointed out in the ALJ's decision. It is not hidden in a footnote. This is discussed in a paragraph at length, and still, as stated, it has not been replied to in the brief and submission of additional exhibits or in the reply submitted by petitioner. This is why, even though there are errors and there is a misunderstanding on the part of the ALJ, the department does not disguise that. It is still not fatal, and it still does not at all take away from the remainder of the evaluation and the exercise of judgment the ALJ made in determining that the petitioner's seeking of the application of the interstate presumption and occasional sale were not shown to be applicable. Thank you.
Thank you very much. Questions from the commissioners for the department?
Mr. Chairman, it's Commissioner Brown. I have a couple, if you don't mind.
Yes, go ahead.
So the standard for interstate commerce says operate continuously, not operate exclusively. And, you know, there's a small dispute over that percentage. The original assessment said 80% of the flight hours were interstate. There was, you know, maintenance flights were not included in that. So I think at the worst case scenario, it says 75% of the flight hours were interstate. And so I don't know if I'm misinterpreting the requirement, operate continuously versus operate exclusively, which is what it seems to me the department is arguing.
Who would you like to respond? May I respond to that?
Go ahead.
The ALJ, not making any reference at all, of course, to the Nevada Supreme Court decision that interprets this statute, appears to have taken a one strike you're out approach to this, where if the taxpayer were to fly between Nevada and Reno, or Las Vegas and Reno, for example, within that 12-month period, that would disqualify the purchase from the presumption. But that is not what the Nevada Supreme Court has said on that issue. And I quote, Hera's use of the aircraft in Nevada was use in interstate commerce. A flight departing from Nevada nearly always terminated in a flight arriving in another state or country. So nearly, there were exceptions where there were flights entirely within the state that the court notes. And then the court expressly notes here, quote, in addition, the statute contemplates that some interstate commerce can occur wholly within the state. So the ALJ in finding that there were, up to maybe 20 to 25% of flights that might have been within the state of Nevada, that was somehow disqualifying is not consistent with the Nevada Supreme Court. Nevada Supreme Court says you can have some flights within the state of Nevada, entirely within the state of Nevada, within that 12-month period, and you can still qualify.
Thank you.
If I may reply to that.
Yes.
Thank you. This is where there is a disagreement, and I think that this has narrowed in on where the real disagreement regarding the interstate presumption resides. As we have stated in our brief, that quoted portion of the Harris decision that was just given with regard to wholly within the state, and that wholly within the state was used when the Nevada Supreme Court was explaining NRS 372-258, Section 2. Within that section, it defines interstate commerce. And interstate commerce, as the department does not dispute based on the Harris decision, can be wholly within the state as described in Harris. But that interstate commerce is where there is a flight that begins and ends in Nevada, but then there's an intervening leg that operates outside of the confines of the state of Nevada. That is what is meant in the department's interpretation of wholly within the state. That does not mean, as the ALJ correctly noted, that can be used exclusively in the state. That prohibition on exclusivity in the state appears in 372-258, Section 1, Paragraph B. That is where the legislature had established that interstate commerce must be used, or it must be used in interstate commerce for the 12 months in the state, interstate commerce for 12 months after its acquisition, but not exclusively in the state for the 12 months afterwards. I recognize that Agent Opposite has cited and quoted from a section of Harris. However, that is not how the ALJ interpreted the case. And I believe that's consistent and supported by the plain language of 372-258, which does acknowledge, especially through the lens of the Harris decision, that there can be a wholly within Nevada use and still constitute interstate commerce. But where there is a use of a plane that is not interstate commerce and is exclusively in the state, it does not qualify for that second prong of the 372-258, 1A and B requirements.
Okay, thank you very much. That answer your questions, Commissioner Brown?
Yes, thank you, Commissioner.
Any other questions of the department? Okay, I'll give you the last word. Ruth, please.
Yes, I'd just like to respond to a couple of arguments that were raised. The primary one being the Bullhead City receipt. So what happened, and this was testified at the hearing and corroborated by the flight log records, is that the first flight took off from Bozeman, Montana, and landed in Phoenix Mesa. That was that is the record in the flight logs. That is also the corroborating testimony of the witness who was in contact with the pilot throughout this transaction. It appears that there was an additional stop in Bullhead City that was not recorded in the flight logs. Again, admittedly, there are errors, some minor errors that have crept into the flight logs. They are not perfect. They are handwritten records. That was missed. But I would respectfully submit that it is immaterial to this for the purposes of the analysis here. The issue is, did the plane take off out and land entirely outside of the state of Nevada on its first flight? And I think the evidence we have submitted clearly shows it took off in Bozeman, Montana, and landed in Phoenix. Whether it took an additional stop is immaterial. Again, I would submit that with relating to the interstate use of the plane, that the whole tenor of the Harris case, the Nevada Supreme Court rejected a one strike you're out use. It is unthinkable that Harris would not have used that plane even once during the 12-month period to fly between its properties in Reno and Las Vegas. The Nevada Supreme Court was clearly not focused on a one strike you're out type of analysis. We I want to further submit that in terms of credibility, to the extent that the ALJ was determining the credibility of the witness, that the judge made the substantial errors undermining credibility by mistake, where the ALJ misunderstood that the witness made an admission highly detrimental to this case that actually never occurred. And I respectfully submit that that colored the rest of the analysis and the weight assigned to the remaining evidence that was supplied, and incorrectly so. We believe that the record stands, that the taxpayer has more than supplied ample documentation and testimony to support both claims, both grounds for exemption from use tax, and we respectfully request this commission to overturn that decision.
All right, thank you very much. Bring it back to the commission. Any further questions from commissioners?
Mr. Chairman, this is Commissioner Byram. I just have one clarification question for the state. If I were to take the value of the airplane and apply the tax rate, it's different from what the assessment is. And is that because it's being netted against other audit results? Or how is it being calculated?
Forgive me, Commissioner Byram, I don't know the answer. Do we have the auditor? It was a credit? Forgive me, off screen, and I think if you're going to give a statement, Roger Hovendick, auditor with the department, has identified that there was a credit.
Request initially.
It initially began as a refund request. Would you
Okay.
please switch it?
That answers my question, and that's what I was assuming was the answer. So I'm good, thank you.
Okay, thank you. Any other questions? Motion?
This is Commissioner Brown. I would make a motion to reverse the ALJ's decision.
Commissioner Berson seconds.
Okay, further discussion? Just to save time, Tina, if you take a roll call, please.
Yes. Commissioner Littman,
Yes.
Commissioner Bursey,
Yes.
Commissioner Rotifer,
Yes.
Commissioner Brown,
Yes.
Commissioner Johnson,
Yes.
Commissioner Byram,
No.
Commissioner Witt,
No.
and Chairman.
Yes, motion carries. Thank you very much both for your time and your testimony. Chief Deputy, next case, please.
Our next item is 5D. This is going to be the department's request for approval of a motion to dismiss taxpayers' appeal and affirm the decision of the administrative law judge. And our first matter is Silver Arrow LLC. On behalf of the department, we have Deputy Attorney General Michael Viets, and I will await our taxpayers' representative here.
Okay.
Good morning. My name is Margarita Best. I am an enrolled agent for the IRS and with American Tax and Business Solutions. And we have here Mr. Gregory Young. I'm sorry. Go ahead.
I'm Greg Young, and I own Silver Arrow LLC.
Okay, if you would both repeat your names and spelling for the record, please.
Yes, sir. Margarita Best, MARGARITA. And the last name is B like boy, EST.
Greg Young, GREG, YOUNG.
All right, thank you very much. Sure.
Michael Viets, Deputy Attorney General, bar number 14640, last name spelled Victor, India, Echo, Tango, Sierra.
Okay, and this is department's request, so you'll go first this time, sir.
Today, the department has before the commission a motion to dismiss for failure to prosecute. In this case, Silver Arrow LLC submitted a notice of appeal after being granted an extension. However, no appeal followed. As there was no follow-up and because the deadlines had passed, even after an extension, the department pursued a motion to dismiss. On those grounds for failure to pursue, the department would seek a motion to dismiss because, as with any other party, A failure to meet the deadlines could and does result in the dismissal of a case for failure to prosecute. On that basis, the department argued that here, this matter should be dismissed for failure to prosecute.
Thank you very much. Any questions of the department? Okay, your turn.
Thank you. I am new. I thought when I responded to and wrote a letter in March, that was my brief. And so Greg and I were waiting to hear from the Department of Taxation as to when we would be heard so that we could present the materials. We're asking today for an opportunity to be heard. He's got no issue paying the tax. He knows he's made a lot of mistakes here. He's in the process of making those corrections with my assistance. And we just want to make sure that we're paying the right amount of tax.
Okay, any questions of the taxpayer?
Commissioner Lippman, how much time do you think you need? So it sounds like you're ready to move forward. This is for the taxpayer, excuse me.
Yes, I am ready. I'm ready. The only amounts that we're questioning are basically the same thing that his prior representation had brought forth to the commission, that we think that he was overstated. Lack of documentation that he provided previously forced the Department of Taxation to take a total of all of his bank deposits for the tax audit period, resulting in a basis of $1,193,709.59 for the basis of the tax. What we're asking for is to be allowed to deduct for product returns that were credited to his account, an SBA, Small Business Administration loan, labor-only invoices, and the loans to the company, I'm sorry.
Okay, no, that's fine. I appreciate it. If I could make a recommendation on this case, having read through it, understanding that you indicated you're new, you thought you prepared a brief, there wasn't a brief. I would recommend that we remand this back to the ALJ to produce additional material for her to reconsider the case.
And that was my question, Chairman. You know, it sounds like the taxpayer, you have that documentation basically in hand to turn over. It sounds like what you're saying.
Yes, ma'am. I have all of his paid receipts for the parts, materials, contractors, everything. I have everything on a USB drive ready to present.
Excellent.
This is Commissioner Byram. I just want to make a comment, Mr. Chairman. Normally in an audit process, you have a period of time to work with the auditor to provide documentation. And then once you've gone through that and the redetermination process and you've gone to the hearing, they will allow exceptions and allow you to provide some evidence that you weren't able to obtain before, or you know, make some exceptions to accept some evidence there. And then that process has ended and we're here at the tax commission, which is not an evidentiary hearing. So what the chairman is suggesting and what is probably going to be done is it's going to be remanded back for you to provide evidence, which is an extraordinary move on the tax commission's part, because that's not normally done. But considering that you're new and you've got all that information readily available and misunderstood the requirement, I think that's making an exception. So if that is done and approved, I would highly recommend that you work vigorously to provide that, work together with the department, provide that information and work through some adjustments, because this is an exception that's not normally done. And with that, I would make a motion to remand for additional evidence to be provided to the Department of Taxation.
Commissioner Lippman will second it, and Commissioner Byram, should we put some timeline on this?
Like 60 days, perhaps? Right, I will amend my motion to add a 60-day time limitation to work this out.
It
In
should,
full. Yep.
this is Commissioner Rutherford. I would think it should be shorter than 60 days.
That would be fine.
Well, either 60 or 30 or 60 days, it still has to be subject to the ALJ's schedule. So,
Right, you've got calendaring to deal with.
yeah, so 60 days is probably appropriate. They look like they're ready to start tomorrow.
Yes, we are.
Okay. Okay, I have a motion and a second. Further discussion? Seeing none, all in favor, say aye.
Aye.
Opposed? Motion carries.
Hallelujah.
Mr. Chairman, could I make one final comment, Commissioner Byram? The taxpayer, I would advise you to make sure you're keeping your records going forward from what you've learned from the audit, because part of the problem is you didn't have an accounting system and an accountant, and you didn't maintain records needed. And you have a responsibility because you have a permit. That's a privilege to do business in Nevada. You really need to focus more on getting your records maintained and kept in good order. And that would save you a lot of hassle time down the road.
I can see that.
Okay, thank you so much.
Hey, may I ask a point of clarification while everyone's still here? This 60 days that's been voted on, is that for the submission of additional evidence to ALJ Blake Dewar? Or is that for the setting of the hearing?
Well,
Submit the evidence and work through it, work through the process.
Yeah, yeah.
It's for the submission of evidence to ALJ Blake Dewar.
So if the taxpayer is willing to sit down with the auditor again, provide that information, and then jointly meet with the ALJ and say, we can recommend an adjustment because we've received this, or there's no recommendation of adjustment. There needs to be the ALJ involved at least to accept that evidence, reject the evidence, and then finalize the numbers. So I would say get on the calendar, but then you're not sitting down in front of the ALJ to make the argument. You're sitting down with an auditor and going through the detail records and coming to an agreement with this is what the adjustment should be based on these records, if anything.
And then that would be presented to ALJ Dewar for review? Okay.
Yes.
Thank you for that clarification.
Can I ask a question?
Right.
Who does she get a hold of today or tomorrow to arrange
The auditor.
the order? How do we get a hold of order? Do we know how to?
Christine,
We've got. the
We got that?
information.
in this,
Okay.
Christine Putman has been the audit lead, and I think she's been very responsive.
I've got all of the information I need in order.
Phone call to
Just want to
the,
make sure.
tomorrow, we'll get you in touch with who you need to get in touch with.
I have her direct number.
Perfect. Okay. Thank you very much. Good luck.
Thank you so
Thanks.
much.
Commissioner said this is real, very, very rare. We usually don't do that.
I do understand that, and
Thanks.
I'm extremely appreciative to the opportunity to represent.
Very good. Thank you very much.
Thank you, sir.
Chief Deputy.
Thank you, Mr. Chair. Our next item is 5D2. This is again the department's request for approval of a motion to dismiss taxpayers' appeal and affirm the decision of the administrative law judge. In this matter for tobacco leaf, on behalf of the department, we have again Deputy Attorney General Michael Beets, and taxpayer is also present here in Las Vegas.
Okay.
Hello, my name is Walid Sabra, W-A-L-I-D. Last name is S-A-B-R-A. I'm here, the owner of Tobacco Leaf LLC in Nevada.
Okay, very good.
And my name is Michael Beets, Deputy Attorney General, bar number 14640 on behalf of the department. Last name is spelled E as in Victor, I as in India, E as in Techo, E as in Echo, T as in Tango, S as in Sierra. Long day already.
That was funny. Okay, it's department's request, so go ahead, sir.
Today, the department asked the Nevada Tax Commission to dismiss the Tobacco Leaf LLC appeal for failure to prosecute. Unlike other cases that may have come before the department or before the commission, where there has been an immediate response from the taxpayer or their representative to challenge the motion to dismiss, an attempt to supplement the record, a change of attorney, and the pursuit of information even after the ALJ had issued their opinion, and reaching out to the department to make every effort to make the department aware of the developments in the case and that there had been failures in communication. Here, there's been nothing but radio silence. As a result, the deadlines have passed, and since those 30 days have passed, no appeal has followed. Accordingly, As the department and as the commission is required to treat all taxpayers fairly and equally, the department would seek that this be dismissed as it would with any other appeal that failed to meet deadlines.
Thank you very much. Any questions of the department? Okay, sir, go ahead.
I applied for an appeal on April 12th. And I have not received anything from the department till July 13th saying that they wanted to dismiss my appeal for the hearing. That's all I have. And I'm here to see why did I not receive anything like certified saying this is what they need from me to do. Not even an email or a phone call. All I received was a certified letter saying the department wanted to dismiss my appeal case.
So did you send your request for an appeal?
Yes, I filed an appeal in a timely manner on April 12th, and I haven't received anything from the department till July 13th.
How did you submit it? Was it a letter?
Certified, absolutely.
Certified?
Yes, sir.
Okay.
And on July 13, I received a letter certified saying that they wanted to push for the appeal to be dismissed.
Okay.
Mr. Chairman, Commissioner Byram, in our documents, we have a May 4th letter from the state to Mr. Sabra about saying that they acknowledge receipt of the appeal. Was that letter not received by the taxpayer?
I did not receive any letter except for the certified letter on July 13.
What is your correct address where you receive mail?
My mail is 7175 West Lake Mead Boulevard, Suite 120.
So this is properly addressed 89128?
Correct.
Okay. There's a letter in our documents that's properly addressed to you, acknowledging the appeal being received and telling you what you need to do next.
Okay, I did not receive anything from the department except the July 13 letter. That's all I received.
So you, if I understand you correctly, you asked for, after the decision was made, you asked for an appeal. And in that request, did you include a brief with your explanations of?
I did not. All I did was on April 12th, I applied for an appeal. And I certified letter, sent it in. And until July 13, I got a certified letter saying that they want to dismiss my appeal. That's it.
I guess what I'm asking is, what did your appeal say?
The appeal was I wanted to appeal the decision of the department judge about the decision of the audit.
With any explanation or?
The explanation was their calculations are misleading. And I have some document to show that the numbers that they came up with is not accurate.
Was that in your information requesting for an appeal? That's what I'm asking.
In the request for the appeal, I just said I wanted to request for an appeal. I didn't have a specifics. What I thought the appeal was for me to discuss these issues.
Okay. Any other questions for the taxpayer before I give the department the last word? Good.
Thank you, Chairman Wren. By the documents I've received, we show that the May 4th letter identifying and explaining what needs to be done next in order to pursue an appeal has been sent to both Tobacco Leaf LLC at 9400 Southeastern Avenue, Suite 105, Las Vegas, Nevada, 89123-7937, and to Mr. Waleed Sabra at 7175 West Lake Mead Boulevard, 120, Las Vegas, NV, zip code 89128. This was the same address that was included in the traditional mail submission of the notice or the notice of appeal. At this point, the department has records demonstrating that correct and necessary notice has been given, but the appeal was not followed up on. The appearance here today, notwithstanding.
Did you receive a request for an appeal certified mail from the taxpayer?
We did receive, I have a record showing that we received a notice of appeal. And then there was the receipt, which is included in your guys' in the commission's packet, showing the May 4th response, May 4th, 2023, emailed or rather mailed to both addresses and correctly identified as the address today.
And then you didn't hear anything after that?
We didn't hear anything after that.
I haven't received any email or even a phone call. I'm not requesting a phone call, but at least an email. If this is something really that magnitude of importance, I think it should have been followed up by at least an email, but I haven't received either.
So you have signed receipts for the delivery of the certified mail.
I received from the department a certificate of service stating, I hereby certify that on May 4th, May 2023, I have this day served the foregoing documents upon the taxpayer and where the taxpayer's designated representative is listed below, if applicable, by mailing a copy thereof with postage prepaid and properly addressed to the last known address as follows. It identifies the two addresses identified there, and underneath that is signed Don Hernandez, Administrative Assistant 3.
Okay, thank you.
Mr. Chairman, this is Commissioner Brown. I am looking at the package as well, and I don't disagree with what council has said. But traditionally, what we see is these types of things are sent certified mail, and we see a receipt for the receipt of the mailing. And I don't see that as part of this package. So we'll just point that out.
Commissioner Lippman has a follow-up question to Commissioner Brown's, because it is interesting. So this certification by Ms. Hernandez almost seems that it was served. So is that USPS, normal mail, or was it someone actually going to the location?
To Commissioner Lippman's question, the second part of the first sentence, I have this day served the foregoing document upon the taxpayer or their designated representative as listed below by mailing a copy thereof. According to the certificate of service by Don Hernandez, it was completed by mail.
Yep, thank you.
It's my understanding that is just regular snail mail, not certified, requiring a receipt, which is a little concerning.
Mr. Chairman, this is Commissioner Rutherford.
Yes.
This is a quick question for the Attorney General's office. But isn't there a provision in statute or regulation that says the proper service of the taxpayer takes place upon depositing the item in United States mail postage prepaid? It is considered served upon it being deposited in the mail. Is that correct?
Commissioner Rutherford, I believe that applies to the final decision.
Okay. Has there been a practice in the past of sending these documents by way of certified mail as opposed to just a regular first-class mail?
Forgive me, sir, that goes beyond the scope of my knowledge.
Mr. Chairman, Commissioner Byram here. It appears that the taxpayer has information and is willing to provide it, but perhaps the letter got lost in the mail. It sounds to me that he's testifying that he would have acted had he received it and taken the next step. And so if we could then allow some additional time. So yes, it was sent and it was sent in the post office and it was to the correct address. So we can assume he was provided with it, but he's stating under oath that he did not receive it. So I just think if we could provide him, just out of fairness, with an additional 30 days or whatever, you're resend the notice and you need to respond or it will be overturned in the next hearing. Could we do something like that?
Yes.
Okay, so I would make a motion then in the case of, is it tobacco leaf, that we deny the motion to dismiss taxpayer's appeal and we deny the decision of administrative law judge. And well, I'm just reading the way that's stated on the agenda, but remand it back to have the letter resent to the taxpayer or provide him with some confirmation that he's received it.
Commissioner Bursey seconds.
Commissioner Lippman asks for a friendly edit to give some time. Commissioner Byram, I think that time is of the essence and any, what about 60 days as we used in the prior case?
That he received the notice within 60 days? Because normally they have 30 days to respond
From the,
Um,
yeah, okay. Got
from the
it.
date they received the letter. So if that letter could be provided to him via email today, he'd have 30 days from today. Do I need to make a change to the motion?
No,
Well, do you want to, this is Chairman Rand. Do you want it to go via email? Do you want him to have a certified letter sent to an address that we agree on today? Because it appears like there's two different addresses. So if you wanted the chain of exactly what's going to happen to give him this opportunity, I'd recommend certified mail, mailed within the next week and answered within 30 days to an address we agree on.
might want to even hand him a copy right now so we can,
Okay, exactly.
yes, let's hand him a copy right now. We can all witness it.
Well, he would have the letter that's already been sent, just with the date updated.
That would be correct.
Exactly.
And he has 30 days from today to answer this, correct? Is what the letter says.
Yes. May I approach Commissioner Tony Wren that he may review and understand what I have and what I'm handing to the taxpayer?
Yes.
Thank you.
You need to give-
Chairman Wren.
Chairman Wren, forgive me.
Thank you. Yes, and let the record reflect that this letter is not going to be readdressed in handwriting as of August 14th, 2023.
Thank you.
Thank you. So do I have a motion?
May I approach once more?
Yes. Perfect. Thank you.
The record, Mike Veets, Deputy Attorney General, I'm handing to the taxpayers represented present here today.
Thank you.
But it's just been reviewed by Commissioner Wren. Chairman.
Thank you.
Mr. Chair, if I may then just ask for a clarification on the motion, then given that the taxpayer has been provided notice today, he will have 30 days from today's date to comply.
Correct.
Thank you. I think we have a motion and a second that's been clarified. Further discussion? Seeing none, all in favor, say aye.
Aye.
Opposed? Motion carries. All right, thank you very much, sir.
Thank you.
Chief Deputy.
Thank you, Mr. Chair. Our next agenda item today is under items for local government finance. Under 6A, we have the consideration and approval of a reappointment to the Appraiser Certification Board. This is a request of the commission to reappoint Soren Papa. On behalf of the department, I'd like to introduce Deputy Jeff Mitchell, who will introduce this item.
Thank you, Chair and members of the commission. Jeff Mitchell, for the record, Deputy Director of Excise and Local Government Services. Under NRS 361-221 sub 2, the Appraiser Certification Board consists of 6 members, 3 of whom are chosen by the Assessors Association and 3 of whom must be appointed by the Nevada Tax Commission. Mr. Soren has been with the department since 2015. He started as a utility analyst with the department, working on valuations for large centrally assessed property. He then transitioned into the role of supervisor of central assessment with the department in 2008. He's a certified appraiser with the department, is current on all his education. He has a master's degree in finance from the University of Tennessee, obtained in 2013, as well as a PhD with an emphasis in engineering and a master's of engineering from the Polytechnia University of Bucharest. He has been a great asset to the department and would continue to be an asset to the Appraiser Certification Board, and the department highly recommends the approval of Mr. Popa. We are available for any questions, most likely him.
I think he's too qualified.
Right.
Mr. Chairman, Commissioner Byram, I would move to highly recommend approval of Dr. Popa for reappointment to the certification board.
Commissioner Brown, I would second, and I would also point out that Dr. Popa is also a certified public manager, I believe, as well. So appreciate your service to the state.
And
Thank you,
very,
sir.
very impressive work that he's done so far and will continue to do.
Yeah, absolutely. Thank you very much. I have a motion second for the discussion. Seeing none, all in favor, say aye.
Aye.
Opposed? Motion carries unanimously. Thank you again.
Thank you for your patience, sir.
Assuming you have some. Chief Deputy.
Thank you, Mr. Chair. Agenda item 7 is informational items for the members of the commission to include the penalty and interest waivers granted by the department for sales and use tax, modified business tax, and excise tax on the dates indicated therein. And also the approval and denial status report log for the organizations created for religious, charitable, or educational purposes. If there are any questions, we can address those, and if not, we can move on to the next.
May I ask a question, Commissioner Byram? On the approval and denial log for the RC&E, everything is approved. Is that correct? There were no denials.
This is Deputy, oh, here we go. Thank you.
Morning or afternoon. This is Charlene Bernardo for the record, Bernardo. There were no denials this time. There was a long period of time before we had a meeting. So all the approvals you see on there are renewals.
Renewals. So it's kind of the ones that were slam dunk had to get going.
Yeah, so they expired and they sent in their renewal application. So those are the renewals that you see on there.
Gotcha. That makes sense. It wasn't like missing a page or something. Okay, great. Very nice.
Read it again. Tina. Okay, very good. Next meeting is going to be October briefing, sorry. I wanted to leave.
I'll be very. Thank you, Mr. Chair. Agenda item 8 is just a briefing from the executive director. I'll be very brief today. On behalf of Director Hughes, we just wanted to provide you a quick update regarding the regulations. As the commission may recall, early before the legislative session, Governor Lombardo issued Executive Order 2023-003, which for all intents and purposes put a freeze on all regulations and asked all of the agencies to produce a report making recommendations for the repeal, amendment, or addition of regulations that would streamline business activity in the state of Nevada. On May 1st, 2023, the commission directed the department to go ahead and issue that order. If you recall, we had several meetings where we looked at all of the commission's regulations, put together a very lengthy report and produced that to the governor's office on May 1st. And then at the conclusion of the legislative session, the governor issued Executive Order 2023-008, which lifted the freeze on regulations, directed agencies to pursue regulations that were mandatory out of the 2023 legislative session, and also to move forward with the recommendations that the agencies made to the governor's office in their respective reports. Because the commission's report and detail was so lengthy, we are going to start commencing the process at the department level to prioritize those regulations. We will have to now comply with the requirements of NRS 233B, which will require the department to provide language to the Legislative Council Bureau, receive that language back in official form. We will have to host workshops and formal public hearings to adopt all of those proposed regulations. So that process will be getting started here late summer, early fall. And you can probably anticipate those matters coming before the commission again in formal public hearings.
Very good.
Last but not least, we just wanted to give you a brief update. We are still at the department in the process of bill implementation. We are having regular weekly meetings with department staff to implement the various bills that affect the department. That's ongoing, and we'll continue to update you with anything relevant as far as how those bills might affect the commission. And also last update on our Carson City move. The office, as we mentioned to you last time, will be moving probably sometime in the November timeframe. We are on track to have that move occur in our Carson City location. And so as you can imagine, it's a big undertaking administratively to get everybody moved over, but we're still on track to meet that November timeframe for our Carson City office move. With that, Mr. Chair, that is my update.
Thank you for being brief. Very good. Our next meeting will be in October. Brings us down to public comment. Tina, could I ask you to read the public comment blurb?
Read that 2 times during the meeting, so we can just go ahead and ask for public comment.
Oh, okay, very good. Any public comment in Las Vegas?
Yes, I have a comment.
Okay, just 1 second, sir. I'm going to have Las Vegas do their comment, and then you on the telephone, I believe. I will come to you.
Thank you, sir.
Chairman Wren, Commissioners Department, I just wanted to take this opportunity to introduce our newest tax deputy, Mary Huck. She comes to us from, so Mary was most recently with the Department of Insurance or Insurance Division and as in-house counsel. And she has just a lot of experience with different state positions and legal experience. So she's going to be a great asset and welcome.
Welcome. I never know whether to say congratulations or condolences. Time will tell, I guess.
Thank you for having me.
Thank you.
All right, thank you.
Okay, Tina, who do we have on the telephone?
Yes, sir.
Yes.
Hello,
Hello, go ahead and state your name, spell it, and go ahead.
Kazi Aziz, first name Kazi, last name Aziz, Aziz. I'm from the Dollar Enterprises LLC, Nevada. I was supposed to have a hearing on my case, according to my letter I received from the Department of Taxation as 9 o'clock. So I think that you folks are wrapping up the hearing. So I want to know whether my case has been put up in your agenda or should I go for a next hearing? Because I was told to be in the meeting from 8 o'clock. So I'm from 9 o'clock. So I'm here waiting for my hearing to be heard.
Mr. Chairman?
Yes.
Pat Shoulders, audit tax manager for the department. Dollar Enterprises was in the consent agenda. It was item D1.
Oh, okay. All right, yes, sir. We upheld it, right? So we upheld the administrative law judge's recommendation. So we did hear that case.
Oh, okay.
Okay, thank you very much. Any public comment in Reno?
There's no public comment in Reno. If there's any other public comment on the phone, please dial *9. And I do not see any public comment.
Okay, any items for future agendas? We are adjourned. Thank you very much.